Hey guys, good morning, welcome to the live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Hey guys, welcome. Good morning. Thanks for joining everybody. Thanks for joining everybody on in YouTube and on the Zoom. Good morning, guys. Good morning, Ross. Good morning, Karen. Alex. Good morning, Mike. Good morning, Juanito. Good morning, guys. Welcome. How am I doing? I'm doing excellent. Thank you, Juby, for asking. Okay, guys. So we're gonna get started with live London analysis. We're gonna get educating top-down analysis, and if we see some trades, then obviously we like to trade as well. So, but what we're gonna do is we're gonna get started with looking at any news that we have coming up in today. So yesterday, as you can remember, European banks were all closed yesterday, so London market was a little slow yesterday. DAX wasn't even trading, it was closed. So today we're going to be looking at DAX, which is the German market. So we're going to go through what we normally do here. We're going to look at US 30, we're going to look at DAX, we'll look at gold, we'll look at oil, and we'll look at GBP USD. We'll do those 5 charts. We'll do a top-down analysis on each one of those charts, which might run us 45 minutes to an hour. And then we'll be looking for some trades around from 4 a.m. Eastern until about 6. And then after this call, guys, then Dave will be back, but he's in the private Zoom room. So, guys, if you'd like access to that, we'd encourage you to join in with SST, and you can trade alongside us throughout the day in all of our other sessions and our education that we offer. Okay, so thank you guys for joining. Before we get started, my name is Ron, thank you, and my partner is Dave at SST. And guys, just please, when you're trading, manage your own accounts, okay? We at SST, we're not financial advisors. We're just providing analysis, some trading throughout the markets daily. Right now, you can see that London market has just opened up 5 minutes ago. There was a big liquidity grab down. You can see when we opened up, it came down here, picked up all the pending orders, and now we're breaking out bullish. So this over here with the bubbles is called Bookmap depth of market live liquidity platform. And it might be foreign for some of you guys. I know yesterday you guys saw just bubbles, but there's more than just bubbles here. It's telling you more information than just what candlesticks can give us. So we like to use this alongside with our trading. And this is the depth of market, DOM. These are the offers in the market. These are the bids below us. This is the session volume profile right over here. This is the VWAP, the white line. And what I like to do when I get started is I like to look over here, like I zoom it out a little bit so I can see, like over here just after 2 a.m. Eastern, that was like where we bounced off the bottom. So I like to place like a yellow line down here, 34,100. That's where we came down and we bounced. So if we ever come back down here, I'd like to see what type of bids or offers there is in the market around this area. And currently we just broke this high right over here where we couldn't break it. So now it just broke with the London market volume right over here. So we broke, little impulse break, came down, they picked up liquidity, and this is the big move going up. So we're going to see if we come back down and we kind of test this yellow line over here. So I'm going to go back to the 5-minute increment slices. So over here, you can see this was 2:55 a.m. Eastern. Here's London market open 3 a.m. where it came down bearish, and then we're coming right back up. And there's that yellow line that I just placed. We're going to test it. And here's 3:05, and then you're going to see the next, when we get to 3:10, you're going to see the next vertical dotted line. That's telling us the time slices of the new candles in the market, and we're looking at that volume. Okay, so let's go over, we're going to look at US30. And also guys, a lot of you guys were asking what type of brokers and things like that. We recommend HankoTrade and AAAFx. They have good spreads, competitive commissions. If you're looking for a broker, we highly recommend that you test them out. Try a demo account, see how they are. They do have bonuses and deposit bonuses, but they do have promotions and things like that where they'll match your deposit as a bonus. So just check them out. And either AAAFx or HankoTrade, depending on where you are around the world. Hanko is you can deposit in crypto and withdraw in crypto, and HankoTrade is also a regulated broker, and they cater to lots of nations around the world. Okay, so just test them out with a demo account, see how they are before you commit your own money and things like that. Okay, so let's get started. Let's look at US30. Okay, so before we get to US30 and we look at any chart, have you guys looked at your news today? Have you guys looked at your fundamentals? Are you guys aware that Wednesday we have FOMC at 2 p.m. Eastern? We'll be streaming live in the Zoom room. Also Thursday after hours we have Apple earnings, and on Friday we also have NFP. So today's Tuesday, so the market is getting ready for a lot of news. So careful trading today, as always. Every day you should be careful trading, but specifically leading into major news. And you can see bullish bids taking out offers. So bullish candle breaking out of here. So London is very, very strong right now. But what we're going to look at is there news that will impact anything today. So there is lots of financial websites you can look at. Financial Juice, Bloomberg, Investors.com, FX Street. What we like to use here is something simple. Forex Factory. It just says the currency. It gives us the impact of the folders. So red folder is red, high impact. If there's an orange folder, it's medium, and then any yellow folder is a low impact. It has the times. You might see some JPY has a lot of tentative news. They don't really display the time, but they're on bank holiday today. So what we have to do is, what we're going to look at is after 3 a.m. Eastern. Okay, so if you were trading pre-market, you've already seen that at 2 a.m. Eastern there was some German retail sales. There's a lot of yellow folders in London. Okay, so this can give us mixed reactions. You may have like a positive folder, then the next one is like a negative folder, then you have a positive one and negative one, and then there's going to be like a skewed direction in the market, unless we have like a one-way direction. Like if these are all like positive actual results, then you might have a one-way move in the market. So when there's a lot of yellow folders back to back, you have to be careful trading this, because we have coming up right now at 3:15, we have Spanish manufacturing, we have Italian manufacturing, we have German manufacturing. So there's a lot of news coming out within the next hour, 4:30, and then we get into 5 a.m. Eastern, new hourly candle. But then there's some medium impact folders in Europe coming out for some CPI, and then after with Dave in New York, we're going to get some really important USD folders, the red folders, the Jolt's job openings, and then through the rest of the day, later on in the evening, over here, if you're trading anything to do with NZD, they have lots of red folders on unemployment change and unemployment rate. So if you're trading over here, be careful as well. So always, guys, be aware of any news that can impact trading. Like over here, we have in another 3 minutes, we have Spanish manufacturing coming out. Okay, so we don't have anything of high impact red folders with high volatility, but still a lot of these yellow folders, they do add up, and they can move the markets as well. They can move them in a good way, like a one direction trend, or it can be very nasty and it can be very choppy. So you do have to be careful when we're trading. Okay, so what I'm going to do is we're going to continue with top down analysis. We're going to go over how we were moving on the daily, hourly, and into setting up a few trade ideas of where we could be going during our session. Okay, so if you guys are aware, yesterday and last week, this is last week, so Tuesday, Wednesday, we had those bearish days in the market. Thursday, we had this big bullish engulfing candle come back up, almost engulf these two bars, and then the end of the week, Friday last week, we had a dip, which was very healthy. It got bought up with a higher low, and we continued to break the previous high on Thursday, and we ended strong at the end of Friday. And yesterday, when we kind of opened up the market, opened up red, it made a new higher high, but then it pushed down and it closed near the end of the day as a bearish shooting star candle coming down here. Today, we opened a little bit of a gap down, but we opened strong, and there's no tail, there's no wick to the downside. So it's a bullish ignited candle on the daily started, and we're coming up, and we're possibly going to touch the close of yesterday and Friday. And if we continue with higher highs, we could potentially break out to a new higher high, which was Friday, and maybe a little bit above here, because we have no price action above here. So we have to look to the left of the chart to get some historical data of where we may move. So what I do is, what I normally do, hopefully you guys are getting used to this, is I use a purple line for the high of the day, and I also place a purple line for the low of the day. So now I see my range around 33,993, around 34,000, and our high is 34,090. So it's about a 90 pip candle today, which is okay, but it's going to open up a little more. So we're going to start to get more volatility in the market. So if we continue to break above like our high of the day, where could we possibly go? So the immediate move where we could see is maybe like this wick and this wick, 34,135. So this is very, like, we might hit this right now, like in London, like coming up to here to this yellow line, and we'll see what type of reaction we get here. If it continues breakout, maybe we hit Friday's high and fill up to there. But and then inside here I have nothing, and then above I have nothing. So what we got to do is we got to look to the left of the chart. So if you're looking for more of a specific target inside the yellow to yellow tape, what you can do is you can look, and there's kind of like a wick right in the middle at 34,195. So if you want to have also like a line inside here, you look to the left of the chart. Last time we were here was November of 2022. We were in here around January of 2023, the start of the year, and then you see multiple rejections when we were coming up here in February. So we do have a range right there around 34,200 psychological area. And if we do break Friday's high, we could possibly come up to these levels, 34,335. I can continue looking up bullish. Maybe we come up to here, and then once we get up here, we have a wick, we've got a big wick, we have another wick and another wick. So what I like to do up here is I like to locate this area as maybe like a weekly, monthly like supply area, that if we do come up here, we probably have a high probability that we're going to get rejected up here in this red box. We got rejected there, got rejected there. That was a big impulse candle that broke out for that high got rejected hard. This was kind of fake out in the market with this green candle that came up on the daily, closed above, and then we continue push down, closed below the next day, and then they started to push down. So we may be coming up there. Who knows? We'll see. But we have to identify that as maybe a potential supply area in the future. And then this could be like a 3-bar play developing on US 30 on the daily. You got this big bar that came up on Friday. You have this cool off bar in the middle, and then we have an ignited bar ready to break out of here, and it might be breaking some highs, but it could also get rejected. Okay, that's another thing. Maybe it doesn't break. Maybe it's just a lower high that pushes down, and let's say today flips and it's not a bullish candle. Let's say we get rejected and we start to push down in London going into New York. So we have the purple and purple area. If we're going to trade inside here, what I like to do is there's like 2 physical bodies that are side by side. So I like to locate these ones as well, because we could retrace all the way back down to this yellow line, 34,037 area. And when we're down here, I'd like to see what happens down here. If we cannot hold this yellow line, we have a high probability we're going to come back down where we opened to the purple line. And if we break, we can't hold, we're going to have a new low of day push. Where could we go down? Now we start to look at some historical data over here. So over here, we have a body and a wick, 33,900. We may come down to that level, and that's roughly maybe half of the green candle on Friday. So right there is about 50% retracement. If we can't hold here, we're going to maybe continue to push down, maybe down to here, where we've got a body and we have 1, 2, 3 wicks over here to the left. And again, it's all personal preference. Like, I'm opening up the range for bearish move, but if you want to get, again, more precision, like another line, you can see a body and a body there at 940. So you can start to see, if you really want to get more precise, you can place like a line here and here to break it apart. And then 50% of the move, what I like to do is I like to maybe put like a green box coming in here. So if we are coming down here on the lower time frames, I'd like to know that when we come down here, this is an important area, because it's 50% of this big bullish daily candle. It could come down here on the lower time frames and bounce and catch like a wick where we're scalping and go right back up. If we break below here and push down, then we might come down to all of these bodies right down here before we hit this big yellow line down here. So we have to locate this area as well. Okay, so that's good enough for the daily. That's more than enough. We can see that we're coming off of bullish week. Yesterday we hit a high, but then it got rejected and came down, closed below here. So essentially we should have had a bearish candle open and push down with this momentum over here, but it opened strong and we're opening up bullish and coming up to the high of the day, but got rejected in London. So over here on Bookmap, you can see like where our new highs are up here. So I also like to place like a yellow line up here to tell me that that's like an important area where it tried to attempt, got rejected. It tried another 2-3 times, got rejected, and continued to push down. We might be breaking this critical support level and then come down to the VWAP, and we'll see what will happen down here. Okay, and guys, this is Bookmap. If you're interested in Bookmap, we do have the link in our description. It's a really good platform if you like live liquidity and live data in depth of market. If you're interested in this, we do have an affiliate code. Okay, so let's move on now to the 1 hour. Okay, so the hourly candles tell you a little bit more information than the daily, because now it's breaking up the daily candle in hourly increments, 60-minute increments. You can also, it's all personal preference, you can go to the 4-hour block if you like, the 4-hour time frames, identify 4-hour levels, and then come to the 1 hour. It's all personal preference. Whatever you do, it's just, you're just studying a different time frame. But nobody's right, nobody's wrong. You can go daily, 4-hour, hourly. You can go 30-minute, 15-minute, 5-minute if you like. I just personally like to go daily, hourly, and 5 minutes. And then we can see maybe a head and shoulder already developing on the hourly. This area where it was kind of consolidating is a left shoulder. Here's the head yesterday. Okay, here's Monday, like 10 a.m., 11 a.m. red. noon green, then we come back down red, 1 p.m., then 2 p.m. they really flush it, power hour they push it down. So then here's the Asian channel, Tokyo channel here going into the futures market open, and then we come into pre-London, where we're trading in here. Okay, so this could wrap like over here like a right shoulder and continue to push down to this big area of demand that we identified on the daily. Maybe it comes down here and it may bounce and go back up like it did over here. See where the candle came down and got a wick and bounced up for that move. We could come back down here and bounce. But if the volume closes below here and gets rejected at this green box area, then we flip the box red because to signify that there's resistance or supply here, and then we might be pushing down to this daily or this daily, and then there's our last bit of hourly support in the market right here that will hold US30 at 33,650. If it loses that support, then there's going to be a big drop coming down. Right now, what can we see on the hourly? There is a little bit of a trend pushing up currently. So if I'm looking at like right over here, this is an hourly trend pushing up. I'm going to use a white line. I can see that there was a break right here at 2 a.m. pre-London. There was a bearish candle that came all the way down, but it got rejected and it came up and it closed strong. So the volume closed still inside this hourly bullish trend. And then here I see it opened. It came up really bullish. We saw at the open of London, came up to the daily high and got rejected. And now we're coming down. We might be breaking support level. You see now how Bookmap, we've lost this critical support level, the yellow line. We came down to the VWAP and we broke the VWAP, and now we're pushing down. Sellers are in control right now, taking out all the bids in the market. You can see the depth of market. You can see how thin it's getting down here. All of these bids are starting to get taken out. So there could be pullbacks, but now pullbacks might come up to the VWAP or back up to this critical yellow line and start to get rejected and get absorbed by all of these offers in the depth of market. Okay, so we saw a big reversal, a shift in the market right now with London market open, and now it's pushing down. So this could be due to the news that's coming out that they're releasing. Okay, so what we're going to, and then you can see right now we're breaking on the hourly a critical level. We also have like this channel that we were moving up like this on the hourly, and you can see it kind of like London was a little bit of an impulse breakout of the channel but got rejected and coming down. So what we're going to look at is if this can continue to push down. We can see our big rejection right here at the daily high, and in the past you can see where it came down. But then it went right back up. It broke here and went right back up. So now it's using this area as resistance in the market. Let's look at the 5 minutes now. Let's set up our charts. Okay, so you see the 5-minute candles, how we were trading in this hourly channel, coming down to the bottom, going back up to the top, getting rejected, higher low, and then coming back in here, trying to continue higher highs. There was this big candle at 12:30 that broke, but came back up and closed back in here, and then going into 2 a.m. this is when we broke, came all the way down. That was our low down there. Then we started to rotate all the way back up. Here's London market open right over here. See the big liquidity grab candle? It came down, hit the pending orders. We came, then they took out the highs, 3 rejections, and now they're pushing down bearish again, coming down here. So it is moving. The markets are moving. What we do need to watch is this area here. This, like anything to do below this yellow line. Okay, if we hold here, then we might still be bullish and rotate right back up into this channel. Anything to do with maybe where we're getting rejected now. Okay, we can see below this purple line we got rejected quite a few times. If I bring this across, it kind of came right in there in London market open and got rejected 3 times. So we'll identify that with like a red supply zone, and we will be looking for buys above London's high, above the hourly trend line and above that supply zone later today. Okay, who knows when we get up there? Maybe it doesn't even get up there. See now the retracement right back to the VWAP and continuing to push down. Sellers are in control. So we could be losing this critical area and it might shift down into here. Another area, guys, okay, what we have to identify is over here. we can start to see that we got rejected here and we got rejected there. So here's another red box. So what we can do is, if we're looking for buys up there, we can wait patient up there, or if you're more of an aggressive trader like myself, maybe we can look for, if we close above here, to come up to that red box. So what I do is, if I'm taking this trade above here, I measure the move coming up here. It's approximately 25 pips to come up to the trend line, 25 into that red box. If we start to break out a little bit more bullish, we're looking at 30 plus going up there. But you see now how we're breaking down, guys? Market is bearish. See all of the offers, they absorbed all the liquidity. We respected the VWAP, and now they're pushing down, taking out the bids, possibly to that yellow line that we figured at 2 o'clock. That was the support level, and you can see right there, that's where it is. If you see how candlesticks match up with the live liquidity, this is how you can start to match up things. So down in here, this is where we might have some support in the market. Like you can see also over here, there was support over here, support right there, bounce. So that's another area that can be green on our chart. And then to me, this looks like just a false little breakdown, which created the low of the day and retested the low of the day and came right back up. So we didn't really break again below here. But if we do, we could be looking for a potential sell down here. But since we're so close to that purple line, the daily low, what I like to do with this green box is extend it down there, just in case we come down here and pick up more liquidity and go back up. I will only look for like kind of sells if it kind of breaks this green box area, retest it, then drop down. But also for scalping, okay? So you see what happened here? It broke down, impulsively broke down, because we have 2.5 minutes still to go on the candle. So it broke down, but did you see when it came down here? It picked up all the bids. That's what the wick is on a candle. It came down and got rejected and picked up the bids. So when we broke down here, it came all the way down, but picked up a lot of bids down here because we're getting into a critical support level. And now the bids are bringing it right back up to the VWAP, and that's why now the candle is filling up with bids. It's filling up with bullish volume. So that's why sometimes when you enter candles with impulse before they close, you could be getting in trouble there. Okay, so it's coming right back up. Now, what I can see is they broke the low there. So if it ever does come back down there, and maybe we get the opportunity to sell the market again, we could possibly sell from here back down to this green box. Maybe we'll come down, fill this wick, and continue to push down. But before I do any trades or anything, I measure. So it's about 20 pips. Coming down a little bit deeper into the green box is 25, and if we start to break out, it's 30 plus. So if we do come back down into here, we can possibly look to short that area in here. This could be, again, the consolidating area where the volume might come in and just trade like sideways in here. If you don't feel comfortable trading inside here, what we can do is we can trap this zone, and it's going to be like a neutral area where we watch the volume, how it comes in here. It might trade sideways for a little bit and then accumulate a little more. Then we might get that bullish breakout above here, or we might continue with bearish move down into here. Okay, so that's how US 30 is moving currently. London, to me, looks like they faked out the low. They took out the pending orders, then they brought it up. So for scalpers, this is how you need to be scalping the market, because it came right up to the previous supply area. So it's good for about 20 pips. If you don't do anything, if you don't scale out, then what they could do is take out the highs and then they bring it back down. And here was an impulse break to the low. They created a lower low, but now it's like a spin top candle coming in here. So if we continue to maybe close below here, then maybe we will push down. Hassan, is Bookmap set on 1 minute time frame? No, it's set up, see here, these 5 minute time slices. So see these dotted vertical lines, these white lines? Here's 3:15, here's 3:20, here's 3:25, and now we're opening 3:30 right now. So we have a new 30-minute candle opening the market. This is a critical candle for also for scalping too, guys. This is a new 30-minute candle in the market. Okay, so with all of that explanation, I'm going to go move a little faster now. Okay, so we have US 30 right over here to the left of the. We're going to keep US 30 to the left. I'm going to do DAX right now. Going to move a little faster, guys. So DAX to me looks like they just broke it out to the high, came up to 16,000, and just came right back down to where we kind of opened up the market. Okay, so we're right back here. So it's kind of like a pump and a dump. It's kind of like a pump and a retracement back to where we started. So now we're going to see if it holds. Is it going to come back up to maybe 50% right up here, or is it going to break? And look at, if we break these support levels, look at DAX. Look at all the support right here. 15,915. I can see it right now. If it breaks, we could start to drop down into here. Okay, but let's start to do a top-down analysis because DAX was closed yesterday. So if you forgot how it was moving last week, you should always do a nice top-down analysis, looking at everything. So we can see we were kind of consolidated for the weeks of April 17 all the way coming into last week and starting. So it was just barcoding up here. So it was green, back down red, coming up green on Thursday, April 27. Friday, okay, it was a bearish day, it came all the way down here. They picked up the liquidity and we were very strong near the high. And then over the weekend, so Monday, okay, was closed for DAX, and now you can see the next candle is Tuesday today. So we opened and we came in London, we made that high, 16,007, right up here. And I'm going to place a purple line up here. That's our high of the day. And then also now our low of the day, purple line right at the low wick. We're currently there, okay, so now we're pushing down. So what did DAX do? It opened bullish, came up here, high of the day, rejected, coming back down, maybe going to break the low of the day. Other critical levels is, let's locate Friday's high. Just in case we come back, this is now a daily resistance in the market with a yellow line. If we can come back and break this yellow line, we might come back to the high of the day. But right now, it's maybe a bearish daily candle pushing down. Maybe they pinned it. That's it. That's London's high and they're pushing it down now. If we break and we continue to push down, maybe we might be coming down to like these levels where there's these bodies in the market right over here. Some are gapped, some are not, so it's just your personal opinion where you'd like to place it. I'll place it at this body and then I get 50% of this green one to the left. And then you can also look more to the left of the chart. If you get some other bodies or wicks lined up, then it kind of strengthens your decision to put it there. But don't stress yourself out again with these lines. It's just a personal preference where you want to place them. Like I'm placing this one now at this wick, that wick, and this wick. That's just me. Someone can say, Ron, why didn't you put it at that body right there? And absolutely you can. If you want, let's put it right there. So we get that body, we get that wick, and that body. So it's just personal preference. And then you can see that there's a bigger space, yellow to yellow. If you want to get another tighter line in there, you can see that body right there at 852 is kind of separating everything. So you can have another one in there. It's all just personal preference, guys. Some traders like to have more lines on the chart. Some traders don't like as many lines on the chart. Okay, if you guys don't understand what Bookmap is, don't worry about it. Don't concentrate it. Okay, it might throw you off your trading. If you guys don't want Bookmap on YouTube, I can take it off. But this is, if you guys know how valuable this tool is over here, you guys really want to learn what this is. Right now, if you're just seeing bubbles, I understand. But take the time, guys, to learn something new. Everyone is just so quick to just talk about something. Take the time to learn something, people. If this is foreign to you and you don't know what it is, first time I saw live liquidity, I saw bubbles too, and I didn't know what this was. But my questions were, I need to learn this. How can someone teach me this? What is this? This is not, what are these bubbles? And just really focus on what's going on here. Like learn what a depth of market is, this type of analysis, and what's going on in the market. You're actually getting so much more valuable information than what a candlestick is telling you over here. So, but when you combine these side by side, it's very valuable. Okay, so what we can do is coming down now, bearish momentum, okay? And then where do we have kind of like some demand in the market? I can see like right over here, we have demand, lots of demand holding this area for DAX, right over here. So I'm going to place like a green box just in case we come down here today, tomorrow, anytime this week. If it comes down here, this might be an area where it holds. This was where we opened on this day. It came down red, but then we came back up and we closed strong. So if it ever comes back down, this is where there was a lot of like buying momentum in the market, right over here. Okay, so we're coming down bearish right now. We can all see that. Okay, so let's go to the 1 hour. When did this all happen? Right now, London market open. See how we were just consolidating? It was a very boring Asian session, no real movement in the market. And what happened? London opens up and news in the market. And you see we opened up bullish and we came up and we made our high of the day and we got rejected, and now we're coming down. We could be possibly in the next 23 minutes closing below all of this structure, and then we might be pushing down further bearish. We might be having a bearish day developing in the market already from London. Okay, so you can see that there's a big bearish move coming down. Let's look on the 5 minutes right now. Okay, so look at the 5-minute candles. See how they were trading. So London market opened up, it opened red. They came down, they took the liquidity down here, they closed it strong where we pushed up for the high and then a couple rejections. Now we closed below that critical daily line, retested it and rejected. So going forward, this area below this like yellow line, we're going to use this as an area of resistance going forward. Okay, and then now we're breaking our daily purple low, which is normally an area of support in the market. Okay, but you can see that we're breaking it currently right now as I'm speaking. So this candle is going to close in 2.5 minutes. So what we're going to see is, can this body close below here, or is it just going to come down, pick up liquidity, and go back up and close inside here? If that's the case, again, if we're going to come back inside and trade in this box, this could be the consolidation area. Okay, and if you want to trade in here, you absolutely can, but just understand how big the range is. So from like here to the top, it's approximately 30 pips. So if we're like buying in here and we're taking it up here, you could get 30 pips coming up. But it could be trading sideways in here. It could be like this type of volume, you know. But pre-London, we started to open up with more volume in the market. So if we come back up, coming out of the consolidated area after it accumulates and we close above here, then maybe we can look to take that buy and take it back up to London's high, which is the daily high, and we'll mark it with like a supply zone above us here. But we don't have to worry about this right now. We're away from it. What we need to worry about is if we start to break down, here is a critical level. Look at where all these wicks were in the market right over here. A wick, a wick, a wick. And you see how we're coming down red right now? Okay, it might come down directly right down to this red line and bounce and go back up. Because this was a resistance in the market, this can act as a support going forward. If we break this red line, we're probably going to come down to this yellow daily. And then if we push down this yellow daily, there's some other critical levels like over here. See the neckline? So if you look to the left of the chart, you can start to see more data. There's a neckline, double top, and breaking down. So if it breaks this daily, it might come down to this red line and go right back up. Okay, so if we're going to continue to sell down in the market, we'll watch to see if it can close below, maybe come back up and retest this level, you flip this and continue to push down. This candle is going to close in 30 seconds. And then also, guys, if you want to look for a buy inside the box, what you can do is, inside here, if this volume comes back inside here, closes, and kind of retests this, we could look for a buy. And we can buy right here and take it back up to the supply. And then we watch what happens up here. It might get rejected there. We might have to take our 20, 30 pips and put them in our pocket because it could get rejected and pull back. If it pulls back in here, it'll still accumulate. Then what we look for is the continuation. If we can break out of here and close above and retest this, then we're looking for the big move to come back up to London's high. And then we take that buy above there. But if you want to test out like a buy inside here, we got to wait for volume to come in here, close, retest this, we can go into a buy, place our stop loss below the previous low, maybe this red line or down in here, and we can ride it up. Okay, so I'll leave it like this pathway to show you that that is a possible path for buying, but we need to close above here and retest, and maybe we'll get a move like this with these green candles coming up. If we can't come in here, then this area will possibly be supply in the market and maybe continue pushing down for new lows today. Okay, so we're gonna leave US 30 side by side with, or sorry, we're going to leave DAX side by side with US 30 right over here. Okay, so over here, look at what's going on with now US 30. It's getting real choppy. See, we pushed down here, came back up, closed here. We came up, came back down, closed here. Came back down, came up here, closed here. So you see, even these bodies, nothing is closing above here and nothing is closing below. It's just right in that area. So same thing with US 30. If it kind of closes above there and retests, if you like, you can take that buy coming into there. But I'm going to leave it up there so you can see like the difference between the two, and then you decide which one you like. Maybe to buy inside here or with closing confirmation. If you don't like any of these areas, then don't buy inside the consolidated area. You need to learn how to trade consolidated areas. If you don't feel comfortable trading in there, then wait for above or below. Okay, that's my opinion. You got to know what's going on in a consolidated area so you can educate yourself as to what's happening in here. Okay, so these charts, guys, I'm going to give them to you guys in Zoom. 1 second. Okay, so what we're going to do now is we're going to continue with our charting. We're going to move over to gold and oil, okay? Because I know some of you guys cannot live without gold. So let's do gold. And then over here, guys, while I'm looking at gold and oil and GBP USD and I'm on other charts, I still leave Bookmap over here. This is US 30. This is the Dow Jones, okay? So if you want to follow also Bookmap, you can see it here. Now, what's going on is, remember the VWAP, now we're kind of below the VWAP now, and then these yellow lines are like a resistance point and we have like a support point. When the bubbles like this get really clustered, we're consolidating, you know, they're trading sideways. So when we look at like how it's moving, that's why it's like this. It's very clustered, it's consolidating because it's a lack of volume in the market. There's no real direction, so they're thin candles, and that's what you're getting with these bids and asking price over here. Okay, so let's now do gold and oil. Okay, so for gold, if you're just trading 5 minutes, we can jump in the market right now, no doubt about it. Anyone can jump in the market and trade. I can see it came up here at 225, got rejected, came back down, there's the neckline, pulled right back up again. We came London market open, rejected, double top right there, you know, like an M pattern. That is an M pattern. There's one top, there's our neckline, there's the second top, and then there's the breakdown. That looks to me like a capital M. And maybe if you need me to make it a little thicker so you can see it, that is like a capital M. Once we broke the neckline, there's the drop, and now we're flagging. If it flags like a bear flag, we're going to continue break. Gold, look at gold's support here, 1981. If it breaks below here, gold can drop down to 1979. It might hold, and now we might come back up to 1985 up here. But I don't know how it was trading yesterday. You know, I did trade gold yesterday, but for some of you guys, maybe you didn't. So what we got to do is we got to go do our top down. Like, you got to get in a habit of doing this. It's not just trading in the next candle in the next couple minutes. You want to know exactly how gold is moving on a higher time frame. Do we all know that gold's like yearly high up here is 2050? Do we know that our gold all-time high is 2079 up here, and it was a double top back in August of 2020, and then we reattempted it in March of 2022 and rejected. We came up very strong this year, just last couple weeks. Okay, it was April 13 and April 17, a Thursday and a Friday move. double top at 2050 psychological area, and we got rejected up there, and then it pushed down, and we've been just real choppy on gold, holding under like 2000, like this 2000 level, breaking, coming down to 1970, holding. Look at all the wicks at 1970 on the daily, coming back up. Now we're strictly consolidating on gold. Okay, the range is about 2005 down to 1975. So it's a bigger range, but lots of indecision. You can see buyers are pushing it up, sellers are pushing it down, buyers are bringing it up. We're closing where we essentially opened. Again, up and down day, closing where we opened. Yesterday was a different type of day. We came up bullish to 2006, and then we came all the way back down near the end of the day, 1978, and we closed bearish. It's a bearish pin bar. Today, here's gold's little doji candle right now. Not much volume in it, but it's going to start to open up as we get more into New York. Our high today, 1985. Our low currently in the market is 1980. $5 move, $5. That's about 50 pips if we're trading in here as a scalper. So you got to know what type of range we're working with. So if we come back up bullish, we're going to come back up to 1985. We'll test our high. If we break out, we're looking at 1989, 1990. Okay, another 50 pip move coming up to here. And I'm not just guessing, I'm actually look at the body structure of the market. Here's a body, a body, a body, a body, a body, a body. Here's a wick rejecting off that yellow line. This is a critical area in the market, 1990. If we continue to push up, maybe we're going to come up to here. See the wick, how it lines up perfectly with these bodies. 1995, another 50 pip zone, $5. Okay, that's how gold is moving. And in the next zone, I don't even need to mark it. 2000 is kind of like a psychological level. Okay, 2000 right there line. And now when we're getting up to 2000, what's going on when we break above it? We're getting rejected. Breaking above it, getting rejected. Breaking above it, getting rejected. Yesterday we came up to 2006 and got rejected. So that's telling me, all these rejections is telling me that there is a lot of offers up there rejecting gold. Every time the buyers bring it in here, they push it down. Come in here again, push it down. Come in, push it down. Come in, push it down. What happens if we're coming up again? They're probably going to push it down up there, unless we come with more volume on the buy side and we can break out of here, and then we can break out to 2010 and 2015. But right now, we're coming down bearish today. We have to really watch for these breaks. Look at all these wicks down here. So let's connect a few of them. 1976, 1975 area. Okay, coming down there. One more like possible big drop in the market is here. We've got a wick lined up with these two bodies back in April. Okay, right here. And then I have nothing below these wicks. So to me, I'm going to identify this area as a bigger demand area. If gold comes down today, tomorrow, anytime this week into this pool of liquidity, I'm going to assume that buyers are going to step in here. There could be a lot of pending bids in the market. Like this is how you can do analysis with just candlesticks with a traditional candlestick chart. But when you're doing the analysis and then you have it side by side with a live liquidity platform, we can see gold, we can see all the bids in the market. So this is just, if you don't have like a Bookmap, this is how you can identify the heat maps yourself. But when you combine, like see the heat map down here, see this area on Bookmap, see how it's red, get dark, 34,100, see all of these bids, and now Bookmap is telling me that there's a lot of pending bids. This is the heat coming in the market. So it's kind of like I'm figuring out where the heat is on gold by analyzing a chart like this. But when you have this type of platform, it's also strengthening your decision. So if I start to see that I'm identifying this on a daily, and also the live liquidity is telling me that as well, then it gives me more confidence that there's a lot of buyers waiting down here to get triggered. So the market may want to come down here to trigger all those bids, pick up the liquidity, grab the volume, grab that money down there, and then they might bounce it back up and have enough momentum to break out of that supply. And who knows, maybe gold is going to come back up and retest this. Then we're coming right back up to that those 2050 area right up here. But we can't get up there unless they have volume. So they might naturally need to come down here to pick up those bids. But if we lose this area, then it's not going to be a demand area. Then we're going to lose it, it's going to break structure, and then gold is going to drop down even further. It's going to drop down to 1955, 1950 area, and then we'll see if we can hold 1950 psychological area. So, sorry guys, the more analysis today in today's session. But for some of you guys, like, I haven't been on YouTube, so it's good that you guys are getting some good education as well. We do lots of live trading throughout the day, but education is good as well. Okay, so let's now break down the hourly of gold. Okay, so we did the daily analysis. We have all of our daily zones. These are the hourly candles. Okay, so yesterday, when we kind of ended our call, this is where gold started bullish. 5 a.m., 6 a.m. We came back at 7:30 in our Zoom room, and gold was a big, massive move. And then we started to short it down. This is where we started to short it down. Was in Wall Street, was coming down red. I took personally 2 sells inside this supply area. I started with a smaller one, then I added a larger position. But then when Wall Street opened up, it kind of just continued to push down all the way. So gold was kind of like a pump right into that supply, and it kind of dumped it right back down. And look at where we're trading. We're just trading sideways as if yesterday didn't even happen. It's just like, if you take this big green move out and this big red move, we're right back in this consolidation as if yesterday didn't even happen. Okay, so it just came up there right into that supply. They picked up liquidity and coming down. So it could be coming down with more bearish momentum today because it got rejected hard in there. This is, again, like an hourly channel in the market. If we kind of connect the dots here, we're pushing up like this. There was a minor break right now at London, but we're coming right back up. And this is our high of the day, 1985, getting rejected. So we're trading in between the purple lines right now. If you want to get really, really precise and specific where there's like an hourly resistance in the market, if you want to place a line right here, like in this area, see the wicks getting rejected, wick getting rejected, wick getting rejected. We can place a white line right there, and then when we go to the 5 minutes, this white line might come into play a factor. But this could be also like a big head and shoulder pattern developing on the hourly mo. Yeah, so inside here, left shoulder, coming up is our head, and now we're right back in the right shoulder. So today, we might, if it breaks, we might be coming down into here. But if it holds, we might be continuing to go back up into here. So let's see how it's moving on the 5 minutes. Okay, so remember when I was telling you when we started this, before we did any analysis, there was like that M top that broke down, coming down. We were kind of consolidating here. So that's why I'm looking at that white line. I said it was going to play a factor. So we're looking at that white line. That is hourly resistance now. Okay, there was support. Now it's turned into resistance. So let's kind of place like a red box here. And what we can do is, if gold closes above this hourly resistance point, maybe we can look for buys above 1983 up here. And then we take it back up to the high of the day. And we see what happens up there. It could get rejected. It got rejected here 2 times. It could get rejected a 3rd time. But if it breaks with more momentum, maybe we break out of there, and then we look to the left of the chart where we could go. We've got a big gap to fill, but there's also maybe, like if you're scalping, you can look at to the left of the chart, find like right there, over here was kind of like a support level, then it turned to resistance. We might break the purple and come up to the red line. And then if we break above the red line, we come up to that daily. So just getting some levels above us. Right now, you see how we're holding the purple low of the day. So what I like to do is I look to the left of the chart. I see like over here when we hit the purple line, it bounced bullish. We came down there, bounced bullish. So we should have a green box letting us know that there is some support down here. If we come back and we close below here, then maybe we sell the market. But until gold breaks 1980, no volume is below there yet. Then we might push down to 1976 today. But we got to take out this low. You can see how this area plays significant role. When it came down here, back up. Came down here, back up. So then we got to break this red line, then it will fall down. But here's where it's now consolidating. Okay, so you see now how it's right back inside this channel. So we can trap all that. And then we either wait above here for a move above 1983 and 50 cents, or it's just going to trade sideways inside here, or we wait for a possible breakdown here. If you guys like what I always say, gold is not just going to trade inside this channel, like right here. It's not going to trade in here all day today. It might trade here for 4 a.m., maybe 5 a.m., maybe 6 a.m., who knows. But eventually, gold is going to make its move and redistribute this volume. Either it's going to do something like this where it breaks, retests, and then we shoot for a new high. That's one path. Another path is we're going to trade inside this consolidated area. If you don't feel comfortable trading in here, don't trade in here. The third path is it will break down here to this red line, come back to retest this, get rejected, and it will break back down here and then push down to that daily, down into here. So those are the three paths. That's it. The volume cannot move anywhere else. It's going to move sideways. It'll break out bullish, depending if we're picking up more bids, or it will break down bearish if we're getting if the offers are continuing to push down. Okay, so are we clear in trading in any time frame? This is your moves. Okay, it's either sideways, up, or down. That shouldn't be complicated for everybody. But the complicated part is sometimes they fake us out. Sometimes what they do is when they're breaking it out like this, it's an impulse candle, everybody gets excited and we all buy. But no volume closed above, then it catches a wick, and then what does it do? It comes back into this zone and trades in here again, and we kind of get faked out of the market. So that's the hardest part of trading, is when to enter. So patience and discipline will help you with that. You got to be patient and disciplined. If you miss a move, you've missed a move. I probably have missed 2 trades by now with this top-down analysis. I guarantee you I've missed some moves on the market. But I know coming back, I can come and get moves in New York, like right here. It kind of closed below right here, this candle, 340. See all these rejection wicks on US 30? We closed below, okay? Now that's confirmation that we closed below. Here's your retest candle. See the next candle, how it opened green? It came right up to this. I would have flipped this zone red. I'm sure most of you guys did this. And see how it got rejected? There's our confirmation. It got rejected. We can sell, hit the sell button, place your stop loss if you like above these 2 wicks or at the next supply zone, and now you're pushing it down into here. Did I not say that this zone was approximately 20 pips? That's a 20 pip grab. Same with DAX. We were looking for this to maybe close above. No volume closed above. It closed below and retested this. You should have flipped that green box red. And you see the rejection break. You could have hit a sell button, place your stop loss above here, and ran it down now for possible 20 pips. This one actually 40. Okay, so that's a nice scalp coming down. Okay, so you see how the head and shoulder pattern broke down here? Left shoulder, the head, here's the right shoulder, there's the breakdown. Okay, so like I missed out on a trade there, and I missed out on a trade there. But I'm okay with that because I'm here to also educate too, not just to trade. I trade enough throughout the day myself, where I don't want to overtrade too much, but I believe that today I'm just taking a little bit longer time with analysis. Normally, I want you guys on YouTube to understand how I do things, so that you guys are accustomed to how I do things. So then we can really get this done in a short amount of time, and then we can really fly through this. Okay, so also for oil, okay, analysis. Hopefully you guys understand what these gaps in the markets are too, because it's not just you're going to learn what a gap is today. You want to know what gaps are in the markets always. Just even gap up and gap down candles on 5 minutes, you're going to see those, and you want to know what they are. We had one in Wall Street. We're going to make a short reel on it and educate on it, how it gapped up. It was a bullish ignited candle, and it held, and then it just kept pumping. So you want to know what those are in the market. Not just that you can identify a gap, but understand what is behind it? Why did that happen? Why do gaps get filled? And ask yourself that. So going with the top-down analysis, this was the last day of the month trading oil on March 31st. We closed on a Friday right here at $75.70. Over the weekends normally tend to have a lot of news in the market. Saturdays, Sundays, things happen, wars happen, natural disasters happen. Anything that affects a commodity can happen overnight. If you're not prepared for it and you're in a wrong position, a long position, it could be detrimental to your account. So these guys that were trying to short this bar, there were shorts over the weekend thinking that crude was maybe going to open down here. The OPEC cut production during the weekend, and then all of a sudden crude oil opened up at $81 a barrel. So those shorts got trapped hard, and then the market squeezed away from them. But eventually these gaps do get filled. It might fill in a week, it might fill in a month, it might fill in a year, it might fill in 5 years. But eventually the markets will balance themselves out. This is what's called an imbalance in the market, and then when it comes back, it balances itself out. So it's like it's pretty much like this gap didn't happen because they balanced it out. So we can see after this bar closed below structure, there's like, if you're a daily trader, you can enter on this candle, sell, stop loss 50% of this candle, or above here, just like it's a 5-minute candle. Here was the push down, pull back, right back into resistance, and continue push down. Guys, the market is breaking down. Like you can see US 30 is continuing to break down. So I really want to get involved in this. So let's just finish this oil real quick. So what is our high of the day today? $76 and some change. How have we been moving on oil? So we came down, we've halfway filled the gap, we pulled right back up, little dead cat bounce, we pushed down, and big day on Wednesday of last week, pushed all the way down. We closed like right here, and then what did they do? Look at the gap in the markets, okay? Gap in the markets over here Monday, pushing down. Closing right here today, we're coming up to about 50% of Monday's body getting rejected, and we're pushing down right now. So we may be pushing down bearish on oil. Remember, there's a lot of news coming this week. So if we continue to break down, maybe we're looking at yesterday's low, $74 and around 50 cents. If we can't hold that, okay, then we're going to possibly come down to this level, body wicks. $73 and some change down in here. Yeah, guys, if you're getting value out of the channel, Esteban, I appreciate you, bro. If you guys can hit the like button, guys, that's we do appreciate it. You know, it's mutual respect. Dave and I would come in here. We do a lot for YouTube. We invest a lot of our time for you guys, and all we ask in return is a like. We don't charge you anything. We don't want to do that. We want to continue to come here and give free education, free live trading. We do appreciate a lot of you guys here. All we ask is a like. That's it. If you're getting value, okay, that's what I mean. If you're getting value out of the channel, any YouTube channel I watch or I subscribe to, anytime I'm on there, I get value. I always like. I appreciate what they're doing. They're taking time out of their day to help educate me on things that I'm trying to learn. So I appreciate it. Thank you, guys. Do you see why now I locate this as a big daily demand area for oil? Because you see when we came down here, this started that big move on oil. Again, it came down here, started that next leg up on oil. Here we actually broke below it. Here's the close and the retest, and that's why oil was bearish. But you see over here, we closed back above it and it held as support, and that's what caused that move and then the big spike on the gap. So if we ever do come back down to $72, $73 a barrel, it could be a good buying opportunity. Unless it closes below and retests this, then we're going to push down to $70 a barrel. So you got to identify these levels in the market. Also, like up here, where we have like the gap in the market and now where we're getting rejected, this could be the start of maybe like a supply area starting now for oil in the market on a higher time frame, this $76 range. Okay, so we'll keep it as a supply until the market proves to us that it can close above here and retest this. Then we're going to come back up to $78 or $80. What we got to do now is go down to the hourly. That's good enough daily analysis for oil. Look at the hourly, okay? So we came in right now, 3 a.m. It was a big, strong bullish candle, but it was a big fake out candle. They got all those buyers trapped up there, and what did they do? They moved it away from them and pushing down. So where's our next hourly support for oil in the market? Again, guys, look to the left of the chart. Do we all agree that this is an area of resistance right here? We couldn't really close with any volume above here. Yes, there was impulse breaks. Impulse breaks, I agree with you. But no volume really closed above here until over here. Once it closed above, it retested it, we pushed up. Again, we come down here. Do we see any volume close near below or no, it's just a break coming down, break coming down. So this might act as an hourly support level. Next, so I make it a white line. We're coming down very, very bearish right now. Our next hourly resistance is like right here. See these 3 hourly candles? And right here, how it's a body? Let's place a white line right here. Okay, $75.40. See how it's side by side? Red, green, and then break. And then over here, it's kind of like at the body, support level. Here, look at the wick, right at the white line. Here it closed above, look at the retest. Came down right to the white line and right back up. So that's a good area. $75.40 is a good hourly resistance. We're below it right now. So let's go to our 5 minutes and let's kind of see, yeah, look at how the 5-minute candles came into this area of supply and got rejected. Started to close below, 3-bar play pushing down. Starting to get on in this below 30 on RSI. So typically at this time, there's a lot of traders who are buying the market right now just because they see RSI is hitting below 30. Okay, so if maybe on oil, we can close above some critical areas, like if we can bounce back up, I tend to focus on the hourly white line. Okay, if it's going to kind of consolidate here, what I can do is I can let it consolidate in this hourly area. Okay, the 2 white lines, remember, represent hourly resistance and hourly support. Maybe these 5-minute candles are going to trade in here to accumulate, but if it starts to come out of here strong, maybe I look for a potential buy above the hourly resistance, and then I take it back into the supply area, and then I see what happens. It might come trade right into the supply and break out, and there's the purple high for the daily high, or it might just come in here and get rejected again. But if I'm scalping in here, I measure my moves, so I'm not surprised. If I take it up to there, 30 pips. If I take it a little higher, maybe 40, 45. The top of the move is 65 pips. Okay, that's trading. So at least I know now what to look for. And then also if we continue to maybe push and break down below the hourly support, then oil might continue to be bearish today, and we might push down to that daily yellow line, and if it breaks a little further down. Again, what I do is I measure the move, so there's no surprises. If it comes all the way down to that yellow line, I'm looking about approximately 30 pips. I'm not saying we're going to get the whole 30 pips, but we can maybe get 10, 15, 20 out of that scalp if it starts to break, close, retest, and drop. Okay, so what we're going to do is we're going to kind of follow how it's going to trade in this consolidated area. We're going to see how it's going to build in here. We are trending down right now. Like if you see this trend pushing down, these 5-minute candles are bearish. Lower lows, lower highs, lower lows. So that's why where I'm looking for a buy, I'd also like to break the trend line. Okay, so that's oil, guys. We're going to keep it side by side with gold. Gold broke down, guys. So remember the 3 directions, what I told you? Sideways, up or down. It was sell side. Okay, so we had confirmation of a body close below. Here's kind of, we assume the next candle is going to come up green for a retest to the supply area. Sometimes it doesn't come all the way to the retest the supply area, but it started to break. So if you hit a sell, your stop loss is either inside the box or above there, we could be pushing it down a little bit. So now what we got to do is, remember what I said, the red line? So we hit the red line and broke. That's good. We broke for a new lower low. So they have a new lower low in the market. But now, when you break critical levels, like looking at Bookmap, there's always going to be bids below us. Every single security you trade, every single time frame you trade. Anytime you break support levels, there's going to be bids in the market waiting to bid it up, to get back in the market. So you can see with gold, it broke, but came down here, and now we're getting bids pushing it right back up. That's why you got to give trades room to breathe, so that maybe they come back up and they pick up offers, and then they can continue to come back down. But this could be also where it comes down and then reverses and then closes up here, and it's a buy because it's a liquidity grab. But when we're scalping, that's why sometimes if I take that trade, that's about a 15 pip candle. Sometimes I'm in and out before this rejection happens, and then I follow where it closes. And so I have a different mentality when I trade than most traders. Some traders are holding this, a sell, because they're looking to come down to holding it for who knows when. Some traders don't even have targets. How many of you guys, honestly, and I'm talking to you guys in Zoom too, everybody, how many of you guys, when you trade, do you guys actually have a target where you're looking to take your profit, or do you just trade and hope for the best? Because I know that a lot of traders that I've coached and helped, they had no idea where to take profit. They just get into a trade, they put a 50 pip stop loss, and they hope that at the end of the day, Grant, fingers crossed, and they hope that they hit some profit. That is like it's like trade. It's like doing something with no direction. It's like you just have no idea where. Trading, you have to have targets, guys. You have to. If you don't have targets, it's going to make trading very, very difficult. It will honestly make trading difficult. That's why I have targets. That's why I put that red line there, because it gives me reference. If it's coming down there, I need to know what I'm doing at this red line, because this is a critical area. Where did I pick up this red line? Because that was a previous lower bounce. So here it's showing me for later today that the bears did break this area of support. They brought it for a lower low, but every time we break a new lower low, there's going to be bids in the market taking it back up. So now we're kind of retesting the supply area again. If gold, let me get rid of these arrows. If gold now continues to maybe consolidate below the supply zone, then it may have the ability to continue to drop down. Like if it consolidates here now below the supply and at like that red line, this is where maybe we form a bear flag. And then this is where maybe it comes up, offers push it down, bids will bring it up, and we can consolidate in here. But then maybe it has a high probability of continuing to push down into here. So this might be forming a little bit of a flag down here. Look at oil now coming right back up. Okay, so oil respected the daily low, coming right back up here. So for oil, we're going to close in 3 minutes. We want to also see it breaks the trend line, can break maybe a little bit above here, break, maybe close, retest, and maybe oil is shooting into the supply. Again, I do my targets. So if I'm taking that buy, up to the bottom of the supply is 30 pips, okay? So like I've already have a target. If I'm going into a buy and it comes right up there, I know that approximately 20, 25, 30 pips I'm in profit. I need to make a decision up there because it could come right up there and get rejected. This is a big supply area. So it's coming up with volume, but it might get rejected there depending how many offers are in the market. Okay. So I'm going to continue going on, guys. Do you guys want to trade, or do you want me to finish off GBP USD? Like look at DAX, guys. DAX was beautiful. See how it came down? Look into this green box. I didn't put this green box right now, guys. It's like, some traders backtest. They do all of this backtesting. Like I can backtest yesterday and show you, yeah, you should have done this, you could have done this. But do you see why top-down analysis is so valuable? Do you see why now for a scalper, if we took this trade, sell, it broke every single critical level, and look at where it just bounced. We have a red candle, red candle, red candle, and we bounce right off here. This daily yellow line, look at exactly the yellow line, 15,830. And then this is where I got that big green box on a higher time frame. So this tells a scalper when it's coming down here, don't get too greedy. You're coming down into a daily demand area. So if you kind of took that sell is 80 pips. You're done for the day. This could be, that's it, your daily goal, you're out of the markets. But now it's bouncing here. So it gives you an opportunity to liquidate your position, get out, and if you want to kind of scalp the bottom, you can scalp for a quick little pullback buy if you like. If not, you got to hold for a pullback, and what can happen in the market is now we have to figure out where it can get rejected and reverse. Okay, so this is now like where we're going to kind of figure out now where it can possibly reverse in the market. So what we got to do is we got to kind of again look at where we had that resistance right over here, kind of right there. And then what I like to do is I like to see with the fresh volume how it's moving. So right here, if I bring this red line down now to these bodies and bodies, and now what I do is see that wick, kind of this area, I make it like a red box right here. So if we do pull back up here, this is where it could get rejected. It could pull back right up here and go right back down for a double bottom. Okay, so originally the buy was up there, but if I want to scalp now, I can wait right here for a scalp. So if like it comes back up and it closes above here and retests this, I can take the buy up to this daily, hopefully it breaks out of there, and then comes maybe 50% of this big red candle. That's what could happen. It could come up 50% of that red candle and get rejected and go back down. If it breaks above that, it's going to come and retest this area. Again, if I'm taking that buy, I'm measuring the move. At I'm looking for, if I take it here, up to the yellow line is 15 pips. If I take it up to that red line, it's about 30. If I get the full move up to that next supply zone, it's about 45, 50 pips. So I have all these measurements already, like in my head. And then now I can see maybe it's going to consolidate in here. From this daily area inside here, we found the new consolidated area. So now, again, remember our three directions. It will possibly break out bullish coming up there. Option 2 is it's going to trade inside here sideways for a little bit. And option 3 is it can break this critical daily demand area, break, we flip it red, maybe retest it, then all of a sudden we're pushing down in here for a new low. So every area in the market you can identify these, right? And you got to be patient and disciplined. Don't rush trades, guys. I saw some of you guys on the other day were saying you guys trade 6 hours, 8 hours, 10 hours a day. Okay, that's a long time to be trading in the market. But you guys, if you're investing that much time in the market, you guys can look for the best A+ setups throughout the entire day. You guys don't need to trade garbage. You guys can trade the best possible trades a day. You can literally wait and wait and wait until these things make their move. That's the discipline. And when you start to trade like that, you're going to become very consistent daily, and your confidence will grow. So right now, we broke down. Remember what we identified, like a head and shoulder pattern. Left shoulder, the head, right shoulder, break. Now we're coming down where the market is cooling off. This was a big sell-off in the market. So now the market is catching its breath right now. It's just consolidating. Again, it's accumulating. It's picking up bids. It's picking up offers, and it's just trading sideways in here. And eventually, it's going to make its move. It might come right up to here and get rejected and come back down. What we're looking to is a double bottom. Okay, so we're looking for maybe a double bottom here to pick up more volume. Okay, again, if you're scalping off the bottom, like this should be your range as a scalper. If you bought this green box and coming up here, that's about 25, 30 pips. Because when we come up here, it might get rejected. So it came down, back up, maybe we get rejected here and we come back down. Then what we're looking for is like a double bottom. Come back here, that W, and then we break out of here. Then we retest this. Then all of a sudden we're shooting up to here. Okay, this is just the single leg that's coming up. Same with US 30. So you see how we broke? Again, we can look for buy above here. This is now like this big red box or green box is the supply zone. Okay, because we might come and push back down. Now I can see where we have a little bit of support created on our new low of the day coming down here. Okay, and then if US 30 continues to maybe break down, pushing down, we get rejected and we break this and we lose it, we can sell. Continued selling with the selling pressure. This could just be a little bounce and then it comes back down in here. Okay, so that buy, we don't need that buy up there anymore. That's gone. We're not even close to there. This consolidated zone, we came out of it. And then we could be trading in here. Okay, so let's finish off GBP USD, guys. Okay, and let's see, gold and oil. Okay, so gold and oil consolidating, still bearish flag. Okay, we haven't came in here, closed above, so it might be pushing down. So even if you're still in a sell, okay, you should give it room to breathe. Your stop loss should be minimum up here. Okay, or some traders place it at the top of the channel up here. Okay, so let's finish off with, sorry, let me just get rid of these arrows. Okay, so you see what happened? We came up here and impulse break on oil, okay, impulsively broke out, but pushing right back down. So if you took the buy, you went in on impulse, okay? I don't see any volume closing above $75.40, above that white line, not yet. So we probably have to wait a couple more bars to get some volume closing above there. If you're entering on the impulse, okay, then maybe you entered, but you still have to manage your stop loss. Okay, so remember we went over stop losses yesterday. You can place a nice tight conservative stop at 50% of this bullish body. You're still risking about 20 pips, but that's a pretty tight stop loss. So you got to know what security you're trading, because they can come down here and tap you out and then all of a sudden grab your liquidity and turn back up. So most traders trade structure or levels. So they might have their stop loss below here, but still no volume closed above. So no confirmation of a buy unless you entered on an impulse. Gold could still be breaking down. So if you draw like a trend line with gold, we are still pushing down, and maybe it can break and drop. Yeah, so this was like a quick scalp coming down. You know, that's like me. Sometimes I just pip and dip and get out of there. But if you're not fast enough, you close below here and you retest it. So it's still technically bearish, but we got to break through here. So if you gave it room to breathe, you're still live in this trade. Okay, so let's do GBP USD. Oil could be a 3-bar bullish flag pattern here, 3-bar play, green, a pause candle, and then now a new ignited green candle that could be breaking out of here. And sometimes these are the impulse breaks that break through here. But if you're a patient, disciplined trader, you're still waiting for some volume to close above here. And gold looks like a bearish flag continuing to break. So if it breaks, we're going to tap the low, the previous low, okay, that red line. 1978 and 75 cents, and if it breaks, we're going to get a new low in the market, and you can take some more pips out of the market. Okay, so that's what a bearish flag is. You know, a lot of traders get caught up on that little pullback. They get caught buying that candle, and then now look at how the market is moving away. So if you're still holding your gold sells, they're looking good. All we got to do is now break here, and it's going to continue to drop. Where will it drop? Look to the left of the chart. Look below that red line. So next drop is 1978.06 right here. And then the next one is right there. And then the daily. Okay, so there it goes. There goes gold. If you're still holding your sells, okay, so there's the push down. Okay, do you guys understand like the bear flag at below a supply level? You're still holding, Kyle? Nice, bro. Kyle, so I'm not sure where you sold, but also learn like a trailing stop loss in the market as well to protect yourself in case it comes back. But Abdul Rahim, again, you're asking stupid questions. Okay, let's focus on what I'm educating here. Don't worry about how much money I make a month or percent. That's my business. Okay, I don't ask you how much you make at your job. Okay, just stupid questions, guys. I'm trying to teach here about important candlestick patterns, and we're asking about how much money I make. Don't worry about that. Okay, that's between my accountant and my wife. I'm not going to share with the world how much money I make. My accountant could be here, or the tax man could be here. How much is in my pocket? I got lint in my pocket, guys. Oh God, I love YouTube. Okay, so let's now do GBP USD. Before we do that, okay, can everybody list their social insurance numbers in the chat so we can all get everyone's information? Give me your health card number, your driver's license, social insurance number, and your address and how much money you guys make. Let's all put that in the chat, guys, just so we all know everyone's where we all live, all personal information, guys. Let's share it with everybody in the world right now. I think that's smart. We should do that. Bank details as well. If you guys can give me your bank cards, access card, visas, MasterCards, Bitcoin. If you guys can give me your Bitcoin wallet, if you guys want to share your Bitcoin wallet too, I'd appreciate that. Let's all do that, guys. That's smart. Oh, Joel, there's your wallet. Thank you. Thank you, guys. Good stuff. Okay, so we just killed about 5 minutes of quality information where we could have finished maybe GBP USD top down, but we need to talk about how much money I make. How about if I told you I do this for passion? I don't do this for money. How about if I told you that I really enjoy doing this, not for money. I just love doing this. Okay, so we're going to do GBP USD. Let's get focused again, okay? Okay, so GU, guys, okay? Look at, you can see some daily areas of resistance up here: 125.30, 125.50, 60. Okay, so this analysis, guys, is if you want Euro USD, it's either Euro USD or GBP USD, but we'll stick with GU. It's kind of very similar securities. So what we have is on the daily, we have a big bullish candle on Friday. We closed near the high. They gapped it down on Monday. Okay, so gap down, lower high, bearish engulfing candle. So we came down bearish yesterday, and now we opened up bullish. We came up, we retraced a little bit, but coming down bearish. So we might be coming down, but we're coming down into levels of support into here. So right now it's trading sideways. We got green, red, green, red. So let's pick out our levels and see where this is going to move. Ooh, Pablo, I love paella. I love it. Omar, happy Eid Mubarak, bro. Okay, so GBP USD, we have our high and low of the day: 125.14, 124.62. So that's our daily range. Yep, Benny Dave is back today. So I'm going to be going till about 6:30, and then Dave will be back. Tuesdays and Thursdays, Dave is, but he'll be in the Zoom, okay, so with you guys. So you guys can trade trade gold with Big Dave. Okay, so other critical now levels. Okay, see where we opened and where the volume is right now. We're at yesterday's low, so this is a critical point. So let's place a yellow line there. Okay, so for upside momentum, if we do come back up to our high of the day and we do break out, where can we go? So we look to the left of the chart. We got some data over here. We have some wicks over here. Our next high breakout for GBP USD, maybe this week with news, could be coming up here. But then we also have to locate where our big area of supply is. We got rejected there and we got rejected there. So coming up to this level, 125, 60, 70 area, we have to identify this as a daily big resistance area that's forming in the market. If we look to the left of the chart, how did this area react in the past? There was some minor breakouts, but right now it's holding as the resistance point. So it's creating a lower high, and now all we got to do is continue with lower lows. So we push down, but we have these lows below us. So it is a higher low. West, 2 for 2, US 30, 55 pips total. Good job, bro. You're killing it, man. Good job, Wes. Okay, so the low of the day, if we break, so if we come down on GBP USD and we hit 124.60 area and we break, we got a high probability we're going to come down to 124.40. That's about a 20 pip scalp. Okay, I'm just looking, remember, for scalps, scalping zone to zone, right there. If it breaks 124.40, we're going to come down to, look at all these, look at this area. You've got critical bodies and wicks all in this area. Got critical bodies, a wick, a critical body, a wick bounce off, critical body. So that's a big level. If we can't hold that, then you can see we're coming down, we're engulfing this bar, So now sellers are in control. And if it breaks, then again down here, our last critical level is kind of right here where we have these bodies, right here at 123.75. And then below that, I just have wicks. So now I've kind of identified my big daily demand area right down here. And then I use these levels, like if my 5 minutes are coming down here and they're getting really oversold into this green box, this is where I want to buy. Okay, so now our daily candle, let's dissect it into hourly. Jay Robertson, you got 25 pips on GJ Sell. Nice, good. Congratulations, guys. I love how you guys are killing it. Good job. Okay, so how is it moving on the hourly? We see this big pump on Friday. Friday, Wall Street, there was a big bullish move for the pound. US dollar was weak on Friday. I'm sure some of you guys remember that when we were trading Wall Street here. There was now a pullback there into supply push down. It's kind of like a M top, double top, but with a lower shoulder. So it's showing that there's more offers in the market. They're not allowing it to come up to the double top. They're pushing the market down. So as we came down London yesterday. There was a move where it pulled right back up into coming into Wall Street, and then we continued to push down in the afternoon, 11:12. Here's the Tokyo channel. This is the consolidated channel, and then we come into futures market where it opened up bullish, and then we got real choppy leading into London, 3 a.m. where it made the high, rejected, and look at right now. GBP USD came all the way down here to the low of the day and it's coming right back up. So let's find where we have some hourly resistance in the market right here, white line. Why here? Because look to the left of the chart. Everywhere here kind of held this area. Look right here, it kind of held, it didn't, nothing broke and closed above it until this body. And now we might retrace and use this as resistance going forward. Okay, and then you see we broke the daily this daily yellow line, but it was a quick break and go right back up. So let's see on the 5 minutes more clear what happened here. So here it is on the 5 minutes. This is what we scalp. So you see how it came all the way down, these 5 minute nice candles coming down. If you're in a scalp sell, it's beautiful, but understand where it's coming down to. Okay, you got to understand that it's coming down to, like, here's a level where it came down and bounced. Here's another level. So if we continue to break below this purple line, I can see that maybe we're going to come down to here. So I'm already getting my levels in the market. And if we break this yellow line, where are we going to come down to? Maybe it's going to come down to this pivot point. Okay, so I already got like my TPs already starting to analyze the markets here. So remember, I was going to say that white line, this is a critical area. So when we identify a critical area in the market, we identify it as an area of resistance because the volume is below us right now. Okay, so it's coming up, but it might get rejected and go back down. If we come up and we close above this area, then maybe we can look for a buy to take it back up to the high of the day, the purple line. But when it gets up there too, we can see that we're getting rejected. Okay, so again, when we're taking a buy, I measure the move to see, and then you got to factor in your spreads, you got to factor in slippage, you got to factor in everything. So that's about a 15 pip zone. 15. This is a currency pair. This is GBP USD. If this was US 30, this could have been like a 30-40 pip zone, but this is FX. Okay, so 15 pips. I'm not saying we're going to get the full 15, but you might grab 5, 10, 15 pips, who knows. If it breaks out even more, then you get a breakout above here. Then we can maybe get 20 plus pips. But here now we see that we're creating a little bit of support, our first bottom. So if it comes back down here, maybe we're going to look for a double bottom at our daily low. Okay, and right now, see, impulse break, it broke out and it's getting rejected. So if it comes back down and closes below here, it might push down one more leg coming down here. But to be on the safe side, and then wait for more volume in the market, like you can use all of these levels going into New York. If we push down, maybe we push down to here. So now we got to find where we're going to consolidate. Are we going to maybe come back down into here and consolidate in this range? Okay, like if it gets rejected, are we going to come back, consolidate in here? Or is it going to start to move up in here, and maybe we're going to consolidate up in here now? And then if it pushes down, I could look to sell down in here. And then I sell from here back down to the double bottom, and I measure the move. If that's a sell I like, it's about 15 pips. So you can see the zones right now in this London session are about 15 pips. Okay, not 50, not 50, 15. Okay, so we could potentially look to sell back down for a double bottom. If you don't feel comfortable, you can wait down there if you like. You know, it's up to you. It's how aggressive you are as a trader. Yeah, I stream New York with Dave, but we're doing those private with our members. So I do Monday, Wednesday, Friday. I do London. Take a little bit of break. I do New York. Dave comes in Tuesdays and Thursdays, and he does also Tuesday and Thursdays some signal reviews, and then we also have PK who does post New York and some Asian sessions. Okay, guys. So that is GBP USD. I'm going to leave it side by side with DXY. Okay, they're directly correlated, these type of securities. Okay, so DXY, this one is our US dollar. Okay, so When the US dollar is typically strong, we should see pound dollar be bearish. Okay, it's kind of like inversely correlated. Okay, so we have a strong US dollar that just broke the resistance, and now we're possibly pulling back. So if it holds support and we bounce and we continue to go up, we should maybe see the pound sell off down into here. Okay guys, so this is all of our charts. Guys in Zoom, I'll give you guys all these charts in one moment. What time is it? 4:30. Okay, we got lots of time here. Okay, so guys in the Zoom chat, there's a chart with GBP USD, and let me give you guys the gold and oil. Let me just update this. Okay, so you see gold, it broke down, came down like a tweezer low, no volume, kind of closed below here, and now it's pushing up bullish. Okay, so we're right back in that consolidated area. So unfortunately, like if you're selling gold, it came down, 20 pips. Okay, back down there, about 15-20 pips. If you don't scale out, if you don't secure anything, then unfortunately there's pullbacks in the market. We broke the trend line, now it's coming right back up. It might come right back into this consolidated area and push down again, and maybe we can look to sell again back below here. And oil, nothing closed above. See oil, rejection, rejection, rejection. Look at the US 30 pushing down, guys. Okay, so US 30, see how it came, and DAX came right up to the supply box and now pushing down. Okay, and here also, US 30 came up, pushed down, came up again, pushed down. It might be breaking below here. So what we're going to do is we're going to watch to see if momentum can break down here and close below and maybe push back down further. If not, I'm going to still be looking for buys above here. I'm still looking for buys above here. Slowly it's pushing up a little bit here, like DAX. Slowly it's coming up, but we need to close above here. Make sure you check your spreads as you trade too, because they do fluctuate. Okay guys, thanks everyone on YouTube. I appreciate you guys. Almost 300 of us on YouTube. Thank you guys, I appreciate it. If you guys can hit that like button, if you guys got some value out of it, helps me understand that you guys appreciate like what we're doing here. If not, I'm just going to come in, we'll do some quick charting, and then we'll just get right into it, and we'll see what's happening in the markets and things like that. I can break things down. But if you guys really get good value out of it, it helps me too. Like, I don't just do this for you guys, I do this for myself too. I want to be dead honest with you guys. This top-down analysis, I trade this throughout the day. So I get up in London, like even if I wasn't trading with you guys, I don't want to be rude, but I'm just saying, if I was just get up myself in the morning, I get up for about 30 minutes. I don't trade 5 charts like this, so I'm going to be honest with you guys. I do not trade all of these charts. Like I just trade maybe US 30 and like NASDAQ throughout the day. So I would get up, do my top down on those, see how the market is moving in London. If I was to go back to sleep, at least now I have my charts ready for New York. And then I have all of my levels. But why I really like getting up and trading this time is because I like to be part of the markets. It's kind of like, I know how London was a fake out, like if because I was trading it. So when I come back in New York, I was there, I was trading it. I got a feel of what's going on, as opposed to just, you're not in London but you're just looking at it. It's just not the same feeling. It's different emotions. When you're emotionally involved and you're trading a session, you'll vividly remember if it was a fake out candle. Like like here, if you bought this and you got rejected hard, you're going to remember that. You're going to remember that for the next couple days. But if I just see it like here, yeah, we can talk about it. It came up here, it got rejected. It came up here and got rejected. It's different. But if we're part of this and we're trading this, you get more feel of the markets. It's like you are emotionally involved in these markets. So I found that my trading was much better when I moved from like a session to a session.
even if it's just for like 30 minutes or 1 hour. I watch London market open, I see how it moves, and it gives me a good indication of how the liquidity is coming into New York, and going from there. Okay, guys, so right now, okay, we always got to look at the time too, okay? Don't just focus on candles, okay? So also look at the time of the what time frame we're on. So right now the time is 4:39 a.m. Eastern. 4:40. So 4:45, we're going to get a new 15-minute candle coming in the market as well. So that brings in volatility, it brings in volume in the market. We're getting close to 5 a.m. 5 a.m. is a new hourly candle in the market. That's another critical time in the market, when we get that hourly candle, because now new volatility comes into the market. Okay, so US oil, we came down, back up, came down. So we're going to look for US oil to close above here, coming in. It's coming in strong, came down, picked up liquidity, nice rejection wicks. Gold is inside here. So gold could be like an inverse head and shoulder pattern. If gold is going to trade in here, we let it build, and then we look for buys above here. Otherwise, if it comes back down, lower high, and then closes below here, we can continue to look for sells below here. Okay, and then let's see GBP USD. Okay, so we still haven't came into this consolidated area. Let's look at any news coming up, because there was some 5 a.m. News. Orange folders coming up soon in the next 20 minutes. CPI flash estimates for Euro, core CPI flash estimates year over year. Some Italian prelims coming in. So that's our news coming forward at 5 a.m. So just going over some of our European news, like we have more red than we do, we have green. So more red, there's a couple of neutral black results. So more red in the European news, and that's why maybe we had the pound drop, okay, because of that news. Okay, so now guys, okay, so now we're getting a nice big bullish push. So what I like to do is I flip this red zone green, just in case this is gonna be oh sorry George, the gold chart, my yeah, 1 second, I thought I gave that to you guys. Do you guys have the indices chart as well, or do you guys need that one as well? Okay, there's the gold one, George. I'll give you guys the indices as well while I'm at it. Okay, there's two more trading view charts, guys. Yeah, no problem, George. Okay, guys, so you see now how we're building off of here. So again, I want to see some volume close in the next 2 minutes, because we have a new 15-minute candle opening the market. So I kind of don't want to get faked out. If I take a buy now, maybe the 15-minute candle is going to retrace down a little bit. So what I'm going to do is maybe hold to see if volume closes above here, and maybe we retest, and maybe in the next 15-minute candle we can get some nice bullish momentum. But you got to be patient, okay? Also US 30, it's coming up into this red box and getting rejected. So we have to wait for it. Let it build. Let it build. It's better that we let it build, so then when we take the buy, we're buying with more volume. Does that not make sense, guys? Okay, so if we have to let it build, we got to let it build, because when eventually it's ready to break out and we take that buy, the more it builds, the more volume it accumulates, the better it is for me and you. We can make money, right? Instead of us just taking a trade now and getting faked out, then we get stopped out, then we lose money. So learn how to be patient in these markets. Guys, if you're looking for GJ, I don't chart it or trade it. I can, but then we won't. We can mix it up, guys. One day we'll do GU, one day EU, one day GJ. But in our Discord channel, guys, we give out signals like over here with Scalper Pro, and with the updates. We trade various securities in here. If you want to see in here what we do, is I would if you like GJ, we sent out a signal. Let's see it. Okay, right over here. Okay, so right here, 242. Before I even started this call, right before London, GJ sell. Okay, entry 172, TP 170, stop loss 172.50. And with a chart like this, like how I'm doing the charts, okay? And then you start to see it's breaking down. 17 pips, trade management, move to stop loss if you can. Another update, it's dropping 35 pips now. It broke the level. There's the M top double, like right over here. See the M, what we're talking about? There's the close with volume below. We assume this candle's coming up green. It doesn't. It's an ignited bar, push down. Okay, and there it goes. Yeah, shout outs to Shahab for updating this. The guy's a machine. We have like someone who is constantly updating this. So there it goes down 55 pips. Now you can go start to scale out. Okay, so if you like GJ, there it is. Like we do a lot over here. Thanks Shahab for updating that, bro. Okay, so right now we have a bullish. Okay, so we closed strong with DAX above here. We assumed that the candle was going to come down red. It didn't. Okay, so it pushed up green. You could have bought that candle, but I didn't, because I was showing that the Discord channel. So now maybe my opportunity that I'm waiting might come down. So I'm going to allow it to come down to this green box and see what type of reaction it comes in here. Maybe it doesn't come in here. Maybe it holds where the candle bar opens. So these are things that, as a scalper, you really have to dial in. You got to watch what's going on here. That's why I like to really focus. I like to zoom in on charts to follow exactly what's going on. Okay, nice double bottom forming on US 30. We can see that the bids are accumulating. Okay. Yep. You can go into a buy on DAX. It's looking to break out the daily. I would recommend, if you go into a buy, place your stop loss maybe below this daily yellow line to be protected down there. There was a couple liquidity grabs down in here. Okay, and also for US 30, we want to watch for a break above 34,008 up here. And this is a different security, guys. Okay, so this is the GER30, the DAX. Okay, so make sure you look at your spreads before you even hit a buy and sell button, because some of you guys don't even know what this security is, and I see some of you guys are just trading it but have no idea what this is. Make sure you look at your spreads before you even trade this thing, because you got to know what your spreads are. Okay, I have less than 1 pip trading this, 0.8, which is really good for a indice. It's kind of like Nasdaq. I have the same spread with Nasdaq, 0.8. But if you're 2, 3, 4, 5 pip spread with DAX, you kind of want to stay away from scalping it. Okay, so now it's coming back down for the retest. I'm waiting down here for the retest. Okay, so if you kind of bought up there, but you still have maybe a stop loss in the market. If you're waiting, now is the official retest. So I'm going to see now if it can actually retest this green box and hold. Kyle, what's the meaning of the green and red dots on Bookmap? It's the transactions. Okay, so it shows like this larger green bubble shows that there was a larger transactions occurring here. This is like an auction. So there was a lot of volume transacting at this area in the market, around 34,106. Why? Because this is a critical yellow line. See how there's a lot of transactions. This is like a supply area, a resistance area. So there's a lot of transactions occurring at this instance in the market, as opposed to here. See this little red bubble down here? It was on very low volume. They trapped down there. It came down, but the market moved away from this area. So there wasn't like a lot of volume traded down here. Most of the volume is trading right now here where the market is looking to break out. See the daily, how it kind of lines up? A yellow daily, and you see this resistance point that we're trying to break out of. So this is what we're trying to do. We're trying to flip the book here. This is the resistance point. See all the offers above us and the bids accumulating below us. So what we're trying to do now is break this point so that the bids will start to accumulate, and then these offers will turn into green bids and the buyers can start to move it up into here. And there's our VWAP, it's up there. So we'd like to come back and hit that VWAP. So this is where if we're in buys, we're looking to break this daily resistance point. Yeah, here we go. Okay, there's the break. So you see how we just broke. Now we transacted in those offers right now. See the red bubble? So we're transacting. It's trading in here right now. Now it's a new candle open. So it may pull back. Because why do we always assume it's going to pull back red? Because we're opening up where offers are. Okay, so you see the red candle. But now when we come down, we're coming down picking up bids. Okay, so that's why we want to populate our depth of market below us. See the rejection now? So now they're coming down to see if these areas can hold. 34,100, we have 11 bids in the market waiting to get triggered. Okay, these are pending orders in the market. If we can hold, if we can pick up all these bids, we may come back up to this point and break out for a new high. But you see now how it opened red and coming down because it got rejected at this critical resistance point right here. There was more offers in the market. That doesn't mean we're going to break structure. It just means that we might have to come down and pick up more bids. We got to pick up more volume. That's just the natural way how markets move. You're never ever going to just get a green candles just move up and go up forever. There's going to be pullbacks, okay? But if the pullbacks are healthy pullbacks and they come back and they pick up the bids, they're getting more, Warner, they're picking up more rocket fuel. They're getting more fuel to break this point. It's like a rocket. Okay, we tried, we got rejected. Now the rocket has to come back down, pick up fuel, and once it gets more fuel, maybe it can break this point and then skyrocket out of here. So that's a good analogy, the rocket fuel, Warner. Okay, so this is the retest. We broke, we closed above that daily area. That was a very strong candle. We closed at the high, but look at how they gapped it down, and we didn't even get a chance to break out. There was not even an opportunity because we opened in a pool of offers. So there was more offers than there was bids, and that's why they're pushing it down. But when we're coming down, we've got to pick up the bids. Okay, we got to also watch US 30 up here. But if now the selling pressure is in control, I'm going to look to sell below here maybe. And then take it down, maybe from here down to the green box, and maybe pick up 15 pips. Because if these sellers are in control, they're going to push it down into here. Same with DAX. Okay, if we're looking for maybe an opportunity to sell, maybe below this light green box, if it closes back below here, it gets rejected, maybe we can sell back down into this point. But if it's still holding, maybe it's going to flag here, okay? Nicola, why don't I look at more previous data on the chart? Because if you can see, I've got two trading view charts and I've got this. Do you want me to get rid of my trading view and all we look at is bubbles? So this is, this is as much room I have on my screen. The price action, these bubbles are only US 30 only. YM is US 30. NQ, ES is the S&P, NQ is NASDAQ. That's what I follow. But I have it specifically on the Dow, on US 30. Okay, so you guys see, we kind of broke and trapped buyers up there. So, if you were buying the high of the candle right at the close, that's what happened up here. And then the next candle, next 5 minutes, it opened bearish. So it kind of trapped all those buyers that bought the high. Now the market is pushing down. See where there's some heat now? See where it comes in like red like this? It's identifying that there's some heat in the market where there is some bids down in here. So now it's breaking down. Okay, so what we're going to do is we're going to watch the close of this candle in the next 45 seconds. Do we trade futures? I personally, I've traded futures, yes. But we're going to get more into it with the snipers. Once we finally finish the stock and option program, we're going to do a futures trading program as well, and do some more education on that. Okay, so let's take a look at gold and everything else moving. Gold is still inside this consolidated area, not doing much. U.S. oil, okay, U.S. oil's broke above ignited bar, continuing push up. So oil is looking good for maybe that continued push. And remember the zone, 30 pips, 20 to 30 pips. It could fill up on oil. Let's see GBP USD. So GBP USD closed. Let's see if it will come back up to maybe give us a retest. If not, it's an ignited bar and it could push down here. But this is the green candle that's going to come up to maybe potentially retest this area where it broke out of. If it gets rejected, you could possibly sell GU, place your stop loss above here and push it down. But we got to be careful, guys. 5 minutes, there's news. So that's another thing. If you're not in a trade right now, I would maybe personally hold off for 5 minutes because we do have those high impact folders coming in from Europe right over here. So like I'm not in a trade right now, I'm going to hold off. We have 3 folders coming in the next 4 minutes and 2 of them are medium impact CPI flash estimates. So the market could possibly move at 5 a.m. With this news. So if you're in anything to do with pound, the euro, DAX, careful, okay? And then you see like this area where we came up on DAX, it came right up kind of to that daily yellow line. So that's like typically why I do top-down analysis. It's to show me that if it comes up to that yellow line, I got to be aware of what's going on here. And I'm not necessarily saying to close the trade, but I'm saying to be aware. You got to be aware that this is a critical area, the yellow lines. It's a daily, okay? So the 5-minute volume can react at these areas. So for someone who's buying, like in here, who's up 15 pips, sometimes, they scale out. But this was a very tricky candle. It closed very bullish. This next candle maybe should have gapped up a little bit and maybe pushed up, but they really pushed the market down. You can see how the bears are in control, pushing it down. But we can use these levels again going forward. Okay, so if we come back and we close above here again, we can look for buys. Maybe it's going to come and hold. Look at the daily area here. So it's coming down to this daily area. If it comes up with a higher low and pick up that liquidity, we can come back and close above here 5 a.m. with news, and maybe it's good positive news and we're pushing right back up. Wes, awesome, man. 67 pips tonight. Good job, bro. Killed it. 3 of 3. That's all you need, man. 3 of 3. Hit your daily goal, and that's it. You're doing amazing, man. Anthony, daily line lines up with 50% fib on DAX. Yeah. So that's where I kind of got like to do like top down was because I used to use fibs quite a bit. So I started to see everything was lining up perfectly with like kind of like top down analysis. So then I just started to continue doing top down. Okay, guys, are we ready for news in 90 seconds? Just please be prepared. What happened with oil here? Did it just freeze over here? Guys, did the TVC chart on oil freeze? It's not even moving. Okay, we got to find another chart. Yeah, because it's moving bullish right now. Let's look for another chart. TradingView is having some issues with their charts. Which chart do you guys use for US oil? Only I haven't had any issues with it. It's a black bull. Okay, so it's bullish. Kind of broke that area of resistance that we had identified. This one's not moving either. They're frozen, guys. I'm not sure what's going on. They don't want us to make pips on oil. Okay, let's just see. Sorry. I just don't want to miss that news, guys. Okay, let's see what's going on here. Okay, so it's 5 a.m. the news. Okay, so I will be looking for buys on US 30 above here. Okay, at some point today. I was hoping maybe it would come up very soon. I'll get back. We'll update the oil chart in just one moment. Let's just watch this news. We'll come back here. And GBP USD. Okay, so GBP USD, guys, could potentially drop down to that double bottom. So if you're in sells, just be careful down here because it could come down and bounce back up. But if it comes down and it breaks here, we're going to look for that new lower low. Okay, so I just want to watch here too how we're moving with DAX and US 30. Okay, so it just inside here too, it's not the best volume to be scalping. That's why we have to be patient with US 30. We got to wait it out a little bit. Unless you're looking for like 10, 15 pip scalps. But if we're looking for something else, we got to wait. Okay, now look at. Okay, so they came down, picking up nice bullish liquidity. Same with DAX. Came down and broke that daily, picked up the bids. You can see we're coming back up, approaching, remember that yellow line for US 30? So we're coming right back up there where there was some trapped buyers. Now the market is rotating right back up, so we're going to see how it reacts here. It came down all the way down to 34,084 here, double bottom, picked up some bids, but we're going to see how it will react if it can get back to this yellow line, and that's kind of where we're looking to buy above. Okay, so we want to see it come down, pick up all of this bids, and then we're going to see how it's going to react back up here. And DAX is coming right back up. Okay, so let's see if DAX in the next minute and 45 seconds, if it can kind of close above here as well. The news came out neutral. Okay, so then maybe it was just an overreaction to the downside, and now it's coming right back up. If there's neutral news, yeah, neutral. So CPI came in flat, core CPI flat. Italian prelims, yeah, so it's no real impact, guys, flat. So maybe we'll see maybe the continuation where we were looking for the upside move. So you know where before the news came out where they were up here and then came all the way down. So if we pick up the liquidity now, we might continue with that bullish momentum that we were trying to do in the first place when it came broke above here. But let's look for confirmation too with volume closing above. This is DAX, this is US 30. We're approaching again that yellow line in the market. So this is that critical area. So we can also identify it with like a zone, like how we do on TradingView. Like right here, you see that trapped liquidity. We can bring it across. So what we're trying to do is we want to see this area, 34,110, 34,108. There's 7, 8 offers in the market and lots of offers above us. We kind of want to get this green volume to transact in here and break out. Then we make 110, 108 where there's going to be these green bids. So we kind of flip the book and we make this into a support zone going forward, and then maybe we can break out to the VWAP. And while we're doing that, the bids are populating in here and coming up, and then if we ever come back down to retest this zone, it's filled with bids, and then we can bounce and then continue with a higher high. But we're not getting up there. So see how we're coming up halfway and then we're pulling right back down. So we got to wait it out. You got to be patient with this stuff. XAU USD right here, Rikudo, is just in this consolidated area. It's just continuing to consolidate in here. I would be looking for buys on gold above 1983 or looking to sell below 1980 below here. But inside here, just let it accumulate. Not the best to be trading in here. No volume. Gold is really light volume right now. Oil froze, guys. We'll look for another one in a moment. And GBP USD is pushing down, might be a double bottom coming right back up. So if we want to kind of get a little bit more aggressive now, going into like 5, 6 a.m., maybe we can scalp right above here. We can take buys if it kind of closes above this area. And then I measure my zone. I measure it. So if I take a buy above there and it comes up there, it's about 10, 12 pips. Okay, so we got rejected. So if we kind of break below here, guys, we could be looking to sell. If we break below that daily, we could be looking to sell. Yep. See how we're pushing down, but we're going to push right back down into these bids. It might pick these up with a wick. See how it kind of stopped? It's transacting. Okay, see it's transacting in here. It's coming to critical levels. And now we're pushing down. So the buyers, again, this pullback, they got trapped. And then pushing down, we're going to see how it reacts here. And I'm also going to see if DAX can close below that daily. Remember the previous low? Right there. We're attempting the previous low. So it could catch a wick and go right back up there. But if we break, okay, they've claimed a new low in the market. What we're also going to look for is volume to close below this daily area. Maybe we'll catch a retest and continue to sell down with the market. Unless you're already in a sell. Okay, so you see what they did here? You know that yellow line? They lowered the offers down into here. Okay, so they lowered it down, and you can see on a candlestick. See where it pulled back into here? That's the lower high. That's because they lowered the offers, and they didn't even allow it to come and react into this yellow line. So they're pushing it down. The sellers are in control. They're the aggressor in the market. See the depth of market now? See all the offers above us taking out most of these bids below us now. And And then you see over here, guys, okay, now if we look back 4 a.m., 5 a.m., look at over here where most of the support is in the market, okay, like right here. If I'm to draw like a yellow line down here, see, when we came down here, bounce up, came down here, bounce up. We're coming back down here and it might bounce up. Okay, so that yellow line is right over here. Now gold, guys, okay, so gold is now pushing up, okay, so gold is going to close in 30 seconds. Could be an inverted head and shoulder pattern where we have a left shoulder, came down here, picked up that liquidity, coming right back in the right shoulder. We could be looking to break out here, maybe a breakout, a retest, and then the push. Remember, that's our high of the day, 1985. That wick and that wick, those two wicks that got rejected, that's what started this push down, that M pattern. Maybe gold is getting ready, geared up to go bullish. So let's watch gold as well to push and close above here and maybe get a nice retest, and we can go in a buy. Then what we can do is maybe place our stop loss half of this candle, or if you want to place your stop loss below 1981 and be protected by all of this, because now this is turned into demand. Okay, guys, we found an oil chart moving right here. Thank you, Mohammed. Okay, so oil, those buys came up to like roughly 50%. Like, look, I can even just, I can look right here. 50% of that red candle is right there. That's where we got rejected. Guys, if you guys are looking for an oil chart that's moving, oil USD, and it's this one with easy markets. Okay, so if gold closes above $75.70 up here, may continue with bullish momentum. Okay, I'm not going to do a full top down on this one. We did it on the other chart. And then where could it consolidate now? Inside here and here, consolidated area. And then if we break, we can essentially push down. If we break this level, and then maybe we sell down to these wicks. Okay, gold got rejected. Okay, so be patient with gold. Like, I don't see it breaking even that red box. Okay, so be patient with gold. Okay, let's see what with indices. Okay, indices are just still accumulating. Okay, I like this. Okay, so it came down red, coming back up green. Okay, so going to continue. I'm waiting it out. US 30 is not showing anything, okay, to trade inside here. So we're going to wait for something above here. Orlean, quick question. If I plan on trading 2 sessions but reached my daily target during the first session, do you think it is okay to trade the second session, or should you quit for the day? In my personal opinion, Orlean, I think you should quit for the day. If you've hit your daily goal, you should be done. If you want to trade New York to practice, brush up your skills, I would maybe trade with smaller sizing, but protect all of your profit is, in my opinion, what you would do. But the best is to walk away. hitting your daily goal, that's what we do as traders. Hit your daily goal and walk away and learn that discipline and go enjoy the rest of your day and not even look at the rest of the markets. I know there's probably a ton of us here that are dying to hit our daily goal and stop trading. So if you've already done it, that's it. That's congratulations, respect. It just stop trading, because what happens in New York if we give away all our profits back, and then what it is. Then we go back to break even. We don't stop trading. We continue going. We might lose, and then we're going to turn a very, very good day into a bad day, and then also lose our confidence, our psychology, and then this might affect us into tomorrow's session. So I personally think you should close it off positive. Go enjoy the rest of your day, and let's do it again tomorrow night, and we can hit our goal tomorrow and just keep doing this consistently. That's my opinion. But if you want to practice New York, or open up like a demo or trade penny sizes, trade with 10 cents. If you want to see like how Wall Street will open and things like that. Okay, guys. So look at the big rejection. Okay, this is a big rejection on DAX in that supply box. So if it closes down here, we might be pushing down a little further. Same with US 30. Right here's the close on US 30, guys. Okay, so we're closing bearish. Look at where we are. We're down here now. So let's flip this zone. We assume it's going to open green. Maybe if it gets rejected, I'm going to sell down here. Just one moment. I want to see a nice rejection. Okay, no, I'm not selling a green candle. Okay. I'm also watching Bookmap. I can see where it got trapped and it's trading up here. So I'm looking below this yellow line. Okay, let's see gold really quick. Gold, nothing. Nothing on gold. Has not broke above yet. So be patient with gold. Okay, so no sells. Okay, we came down, we closed below, but you gotta also watch Bookmap too. See where we came down there? We trapped those sellers, and then the market moved away from them. Okay, so the buyers are bringing it right back up. I'm looking for more of a rejection. Even DAX was a bullish candle coming right back up. I'm gonna get rid of this green box because maybe it's throwing you guys off. Let's look for a possible buy above here. GBP USD, okay, target reached, okay. If you were in a sell, it came all the way back down to the double bottom. Now, we could be getting some buyers coming in the market. So this is, guys, if you want to practice like buying a double bottom and a daily support level, if you hit your buy button, I would place your stop loss maybe down at that next level, okay. And then maybe this move can come all the way right back up to the supply area. Could come all the way back up here, and then if it breaks, you could get a move like this. If you don't feel comfortable buying down here, then wait up here. Okay, but some traders want to learn how to buy the bottom. A double bottom, that's technically where you want to buy. There's a little bit of bullish divergence in the market too, but maybe you want to wait for this candle to engulf, maybe get a retest on a buy. But if it closes below here and pushes down, unfortunately, then the market will sell off. So we got to see if it will still respect and hold this area. Okay, gold, nothing. Got rejected, so it's got to come back down, pick up liquidity, and try again for that breakout. Indices, yeah, we're trying now bullish. DAX is getting up there. So we want to close again above here. US 30, I'm looking for it to close above 34,000 up here. In the meantime, while we're waiting, what is everyone's favorite session to trade? Do you guys like London, New York, like Wall Street? Do you guys like Power Hour, like the end of the day, or do you guys like the Tokyo Asian session? What's everyone's favorite session? My personal favorite is New York Wall Street. I love trading from like 8:30 a.m. Eastern till about 10:30 a.m. Eastern. But I also like the end of the day. You know, you get some nice moves at the end of the day, 2 p.m., 3 p.m., leading into the close. Some really good sessions, good trading at that time as well. Some of you guys, everything. London, New York, Tokyo, everything. But if you could only trade one, which one would be your session of choice? See a lot of you guys, New York. Yeah, I think we all love New York because it's high volume, you know, especially for scalpers. Like scalpers, you can make quite a few pips in a short amount of time. So that's what scalpers look for. We look for pips in a short amount of time. That's why we're scalping the markets. Okay, again, so we're going to watch to see if DAX can push above here. We've came up 3 times, rejected. 1, 2, 3 times. So we actually want to push with some volume and maybe close above here. Yeah, really nice candle close on DAX. Yeah, so it could be breaking out of here. If it starts to move, I'm going to possibly buy. Okay, as soon as it breaks this high wick, I'm going to look to take a buy on DAX. As soon as it breaks this wick. Yeah, I'm going to go in a buy now, okay? So I'm in a buy on DAX. I'm looking for it to come back up to this daily yellow line. I'm in a buy currently, yep. So I'm going to play the momentum of the previous candle. I'm in a buy. If it can get up to that yellow line, I'm looking about 15 pips. But with momentum, I'd like to maybe see if it can break and maybe get above there. So this red zone, I'm going to flip as green in case it needs to pull back into here. Maybe pick up bids. My stop loss is going to be below structure here. So let me just update this with a new measurement right here. Kind of that neckline. I'm trying to break that neckline. Maybe I got in a little premature, but I was playing like the momentum off of this green candle, ready to break. So that's me right there. I'm part of that bubble. So just to let you guys know, okay, so I'm part of that bubble right now, okay, that's me. I'm that trapped liquidity right there. So if you got, maybe this will help you guys understand what Bookmap is, okay? So I bought that high, okay, breaking through here, you know, this kind of bubble. That was me, okay? So that's me sitting up there right now. I'm trapped liquidity. So the market now is moving away from me. It's trying to move away to hit my stop loss, okay? So my stop is kind of down here. The more it moves away from me, I'm trapped up there. Then some traders are forced to hit their stop loss, or some traders are going to just hold and draw down, okay? I'm not that guy that's going to hold and draw down. I'm the guy that will eventually get stopped out of the market. So if they come and they bring it all the way down here, what they could do is, I'm a pending order, also my stop loss. So they could trigger me, take out my order, pick up these bids while they're down there, and then rotate the market back up. Okay, so, but now the market could possibly come back up to me and maybe break out bullish, because now it will get more bids in the market, or I could also add another buy in the market and add volume to the market as well. Okay, so and then I adjust my stop loss too. So if it's coming against me, I don't need to take my full stop loss there. I can get stopped out there, you know, right there. It all depends, but I'm just giving like the range right there. I use a mental stop loss in the market, guys. I don't use a hard physical stop. So I watch everything So if it's going against me on structure, I'll close the trade myself mentally. But I stick to it. I'm very disciplined with it. There's a lot of traders I see that use a mental stop loss, and when it comes down to where they want to get out, then they say, 5, 10 more pips. Then it goes down 5, 10 more pips. Then they say, let's give it 5, 10 more. And before you know it, now you're down 50 pips when you could have been down 20. I really respect my mental stop loss as well. So I'm very disciplined with it. But I don't recommend it if you're new to trading. I always recommend that you use a physical stop loss in the market unless you get used to how volume moves. And you're not over leveraging too. That's another thing. A lot of traders over leverage too much. Yeah, and then if we can also close above there and get a retest, maybe we can add another buy opportunity. Okay, so you see now how the market is coming right back to where I am. I was that trap bubble right there, okay? So, but now the market is rotating right back up to me where I'm now in profit, one or two pips, okay? Nothing. I'm basically at a break even, but the market came right back up to me. So we're starting to see, we want to see more volume close above that yellow line, pick up more bids, and then maybe we can break out of here coming into 5:30 because we're 5 minutes away from a new 30-minute candle in the market. So it's building, it's trying. Okay, so we couldn't close again above there. So the candle opens red coming down. We're going to see if it comes down again, picks up bids, and this could be a critical break. Also for US 30 now. Okay, so if you're looking for a buy on US 30, you can now look for maybe a buy above that purple line. Okay, like right here it's consolidating. But if it breaks above that purple line, then maybe it can go bullish up here. See, I rejected again. So when it pulled up again, look at what they did. They trapped buyers again. So on the next candle, you know, when it opened green, there was buyers that bought that candle right up there. And that's where they are. They're kind of trapped in the market right now. And then the market is continuing to rotate down. But when it's coming down, hopefully it's coming down to pick up the bids. And we can kind of hold the support level. Because if we don't, if we break this yellow line, then it's going to start to drop down into here. And then that's going to be about 50% of this candle right over here. See how it's dropping now? So this is where also I gotta watch my stop. Guys, if you're interested in Bookmap, we have like a link on our on the YouTube channel that can take you over there, and then it's got some promotions and things like that if you're interested in Bookmap. It's an investment. It's not cheap because you've got to subscribe to Bookmap, and then you also have to subscribe to, see over here, this rhythmic data. See at rhythmic, at rhythmic, at rhythmic. Rhythmic data is the one that gives us all of the live liquidity. So it doesn't matter what platform you use for depth of market or live liquidity. There's others, but you have to subscribe to Rhythmic for all of them. So no matter which platform you go to, you're going to have to subscribe to a data feed. So there's two costs involved. But it's an investment in yourself. If you're willing to, you're willing to invest in yourself and take your trading to the next level, and you're ready, then maybe you want to have a little bit of a depth of market analysis tool to help you. Okay, so right now we're just kind of consolidating in this area. I'm looking for this more volume to close above here, and we're looking for that nice strong close. We're picking up some liquidity. It's not really breaking any structure below us, so hopefully we can close strong, go into 530 with maybe a nice push to the upside. But we got to get back volume. We got to get, see this, the bubble. That's me waiting there. There was some more trap buyers over here. So if we can get back and get some bids closing above here, then maybe we'll we could possibly break out of here at 5:30 coming into the market very soon. Also, US 30 coming down, picking up two nice rejection wicks down there. So we'll watch if US 30 can kind of close above here. Let's see what gold is doing. Gold rejected. Okay, so gold got rejected up there. Now we can watch at 5:30. If gold closes below here, 1980 drop. Okay, we see oil is pushing back down. Watch for oil potential sell coming into 5:30. Okay, so gold and oil potential sells if they close and retest and drop. Let's see GBP USD. GBP USD broke down, so flip this one red right over here. And if it continues to push down, we're looking to push down in here. If it comes back and closes above here, we could buy it right back up. But the US dollar is strong right now, okay? This is the US dollar. Okay, we got rejected big time. See the big red bubble now? So those were a lot of transactions that occurred right there at that time, and a lot of them were on the sell side. So that's what that big red bubble represents. But here we go into 5:30, guys, okay? So here we go. Let's see the new 30-minute candle, what it brings us. Okay, we're still holding oil, gold. Okay, so oil closed below. So what you can do is flip this zone, and if you get a retest, yeah, you can possibly sell oil. Okay, so we're below, close below. Assume it's going to come up green. It didn't, so it's breaking. So oil can drop down to maybe down to this wick, to these lows. Yeah, here goes oil dropping down. Okay, so let's watch also GBP USD and our indices. Okay, so we came down to about 50% of that candle. We got a little bit of a wick. So what we want to do is pick up those bids and come right back up here. If not, guys, you see how it's making lower high with a big red bubble, lower high with another big red bubble, pushing down. So if the selling pressure continues to push down, unfortunately, we're going to lose this big daily support level, and then the market is going to drop. So that's where I got to adjust my stop loss. This is where maybe if it starts to break here, I'm going to have to close this trade, because if it's starting to come down with a lot of volatility and a lot of red volume, it's going to sell down into here. Maybe I don't want to take that much of a risk. So like I got to adjust my stop loss. I'm still in the trade. I'm in some drawdown right now, but I'm still watching to see if it can hold this level right at this daily yellow line. Maybe continue to maybe pick up some bids and come right back up. But if not, I'm still respecting all of this selling pressure. You know, we tried I'm still up here. We tried right here, got rejected. We tried again here, got rejected. We tried again. So we got to see now at 5:30, can they come down, really accumulate a lot of these bids and bring it right back up? So that's good. That's good. Nice rejection. But see these three wicks? 1, 2, 3. We've got to close with some green volume above here. And then we can rotate with some more bids populating the market, and then maybe we can get that bullish push. Okay, even US 30 broke down but caught a wick and coming back up. So we'll watch US 30 above here for a potential buy on the buy side. But if it closes below here and retests, it could drop down. That's a nice rejection liquidity grab on DAX. So it came down to 50% of this big green candle. We held above that daily yellow line. Now it's a nice strong bullish pin bar candle. It's going to close in 90 seconds. So what we need, well, what I need out of this, I'm in this trade and a buy, is I need it to close above here or maybe create a new higher high above this wick. Okay, so it's right back up as almost a hammer candle. But see, every time we're coming up, we're getting rejected. Every time. These offers are strong in the market. So there's a lot of resistance up here. So if it fails on that big attempt coming up there, I may have to close this trade. You know, like it tried again with all of that momentum, and again it was a lower high. So I gotta wait for the next bar in the next 30 seconds. Maybe it can open green, try one more attempt, but if not, it's coming down. If it breaks the low, it's gonna come down here, and that's where maybe I gotta take take the loss on this trade, because I don't want to hold down into here and then it starts coming down bearish like this. So again, it came down, picked up more bids. So that's good. It's coming back down, picking up bids. Coming down, picking up bids. But there's a lot of pressure above us, a lot of supply. Okay, so we closed. Now it's again ignited red coming down. Let's see if we can pick up a wick with a higher low and bring it up again. Okay, we're coming back up. But let's see if we can push, and we need to close above this range. Okay, so we're right back. I'm right back to break even. But now we're going to possibly break out. So see now how we're coming back up? Best bids. Let's see if we can take out this area here. Now it's strong coming up. Also US 30 is coming up, so we'll watch US 30 above here as well. But you see how it's 3 equal wicks right here. 15,871. Can we just break for a new higher high? We need to, right above here. This is our opportunity to break for that new higher high. With all of this volume in this bar, we got to break this high. Otherwise, it's going to come back down, get a wick, and come right back down. And it might come back down with a lot of selling pressure. 3 times equal highs. Can't break. So this is the attempt. We really have to break above this. Even a just little impulse to help populate the bids below us. The depth of market will change as soon as this makes a new high. Okay, beautiful. Okay, it made the new high. Now the depth of market is going to start to change. You're going to start to see maybe more bids start piling in. Like right here, 9, 5, 6. We're going to start to see a lot of transactions take place here, but we want to see a lot of bids come into the market. And then if we can close above this area too with all of this volume, that will really help us in the next 3 minutes. Let's see what gold is doing. Okay, gold is coming right back up. No sell, no volume below there. Maybe a double bottom. So we're going to watch gold again. Let's keep an eye on it above 1983 for possible buy on gold. Oil pushed down. Okay, coming down to almost this wicks to these equal lows. Might pull back and maybe continue to push down. We're breaking on US 30, and yep, here we go. Okay, so you see how we broke now? Bids are uncontrolled. Look at the depth of market now below us. All bids. That's good. But what we've got to do is see it here, the heat, 34,096. There's 19 offers. 34,100, 16 offers. So there's a lot of resistance above us where it's at this daily area, the yellow line on DAX. We're pushing, and also US 30. Yes, if we can take out these offers, we're gonna move, guys. It's gonna be a nice big bullish move if we can clear these offers in the market. Yep. So we took out those offers. Remember 34.96? There was 16 offers. Now we got 8 bids. We removed them. We pulled them. Now we got to just take out this one, 34,100, and we're gonna maybe see US 30 build right through here. But we're also looking for the close above. Okay, guys. So you guys understand how we came down here and we picked up all the bids. We didn't really break any support, 50% here. That's why I still held my trade. Okay, so what you can do now is reduce your risk if you like. Take your stop loss, go a little higher. Good, Gabrielle. You put your stop loss to break even. Excellent. Okay, because now we are going to get pullbacks, guys. Remember that. Okay, so there's going to be pullbacks. But what we got to do is we want to pull back and accumulate more bids and continue driving. So like here, now if they pulls back, we've populated a lot of bids below us. So hopefully they get triggered and we picked up more volume and then we can continue driving. Beautiful. But if DAX, that's where I bought in. Remember I bought that candle? That was me. I told you guys, that was me, held in that. That was my bubble. I was this guy right here. So the market moved away from me, but now it came and got me, and now it's pushing right back up. So if it comes all the way up to this yellow line, that's about a 10 to 15 pip move, depending with your broker. But hopefully we can get a new break above here, get a new higher high break, and maybe continue to push a little higher with this momentum. Okay, and US 30, okay, started at the bottom down here. So no sells below there. Big bullish candle. But if we're looking for continuation, we got to also look for it to close above, retest this area, and continue to move. Hey, Taha, booked 9.6 pips. Not bad, bro. Not bad. Okay, so we got an ignited bullish candle opening. If we can hold this ignition on this candle, maybe we can break that daily. But if we can't hold, we're going to retrace down. Where? To possibly, yes, we got that ignition. Here's that ignited bullish push. Guys, that's a nice retest on gold, on US 30 if you're trading US 30. Beautiful, closed above, retest it. You can be on a buy, continuation. There we go, nice little push. Yes, okay, so we got about 15 pips on DAX. Go to a break even if you can. Like if right there, you go to a break even now. So now we have zero risk in the trade and we're up 15 pips. Possibly 20 if we can continue driving. Gold is breaking. Yep, gold is breaking too. Impulse, okay, this is an impulse break. Also, guys, if you're not trading an impulse, watch where it's going to close in the next 4 minutes and maybe flip this zone and look for a retest, okay? I'm not going to focus on gold because a lot of us are in indices right now. Okay, so I'm just going to go back to the indices. Well, we're pushing, guys. Yes, 20 pips on DAX. Here's continuation on US 30. Good job, guys. See how the depth of market really helped us out? That's why I held my trade in a little bit of drawdown, because I saw that there was a lot of bids accumulating below me. Okay, so now I got a risk-free trade up 20 pips, break even. Life is good. Hopefully I broke that down for you guys and you guys understood why I held in my drawdown right down there. Okay, and you guys see now how we're taking out the offers, and if it gets to the VWAP, this is like a big, like a 200 moving average. It's a critical area in the market. If it's still, it can get rejected, guys. But if you're up 20 pips, you know, make sure you book a little bit, okay? But we can be continuing to drive. Let's look to the left of the chart. See this big red candle? Half of it is right here, right there. If I'm eyeballing it, right there, that's about 50%, right? From this body to this body, that's about half of it. Okay, so we might come all the way up there, and guess what? That's where our VWAP is. That's where 50% of that volume is. That's the VWAP. If it comes up there, it's about 25 to 30 pips. Yep, US 30 is looking to break this previous high. Look at it. Okay, that's the resistance point. This is that big area. If we can break here on US 30, it can come up to 50% of this red candle. Right there. So if we're looking how many extra pips this can be from the breakout, there's 10, 15, up to that red line is about 20. Okay, guys, please manage your own accounts, guys. If you're in profit, either go to a break even, scale out a certain percentage up there, leave the trade running, do what you got to do. I'm going to book profit. I booked profit up there at 20 pips. That was my only trade I took today, guys. So I'm happy with that because I'm going to go to sleep in the next 15 minutes and then Dave is going to take over. So, guys, I booked some profit, 20 pips. It might continue to go. If it does, I hope it does. I hope it does, you know, because I know you guys are still in your trade. So I hope this goes to the moon for you guys. I hope it goes 30, 40, 50 pips. But for me, 20 pips is how I trade. 10, 15, 20, I like to get those type of scalps, and I'm in and out. I hope you guys understood how I broke that down utilizing Bookmap, okay? I know it might be completely, some of you guys don't understand what is going on here. I understand that. But take your time to learn this stuff, okay? It can really help you guys as a trader. Mohammed, how much is Bookmap per month? Well, you got to subscribe, like I was saying, to Rhythmic. No matter which platform you use, it's about $30 to $40 a month just for Rhythmic. You got to get the data. And then to have the platform, there's Quant Tower, there's Bookmap, there's other liquidity providers, but they charge about $40, $50 a month. So altogether, it could range from $70 to $100 a month. I know it's a substantial cost for most people, but if this really helps you become a better trader and you're making profit in the market, it's an investment in yourself. Don't look at it as a cost. You know, I tell guys in the Zoom, if you spend $2 or $5 on coffee every single day at a coffee shop, instead of make your own coffee at home and then spend that extra $2 or $5 on a good platform that can help you analyze the markets better and hopefully make you a better, consistent, profitable trader. And then hopefully your costs that you're making in the markets are covering the cost of this platform. But it is very good. It does help as long as you know how to read it. If you're just looking at bubbles, you're not really going to understand what's going on. You just see bubbles. Understand like what's going on with the depth of market, how we flip this area. This critical yellow area was a critical level. Why? Because we never really broke above here since it's been a long time, since like 5 a.m. Now we look at how we held down here, triple bottom, 1, 2, 3. So they held, and look at now how they're redistributing all of the volume. So it's a beautiful move, guys. Excellent. Yep. And we're driving on US 30 as well. So this could be the breakout to that red line. DAX could possibly hit the supply zone. Now all pullbacks could come down. We use this line as support going forward. Okay. Yeah, continuing to drive, guys. Beautiful. US 30 looks good. There's the VWAP. Yeah, Lee, I can't agree with you more. Lee in our group says trading is a business, so you should just see it as a business cost. You can't make money without spending money. I completely agree with this, guys. And then other things like this too, guys. If you take your trading serious, like as a profession, as a business, what you can do is you can incorporate yourself like with an LLC. Because eventually when you're starting to make money in the markets, I don't know where you live in the world, but where I live in, I have to pay taxes. Over 30% on my gains in the markets. So I incorporated myself as a business, so I can maybe help with my taxes. Also, I can write these things off. Like Bookmap, I pay for it, but at the end of it's an expense, so it's a business expense. I can write it off. Things like that. You can use if you're treating your trading as a business. These can be business write-offs. 0% in the Netherlands, Dan. I would love to move over there. 0%. That sounds really nice. Over here, 30%. So it's like someone taking money out of my pocket every time I trade. If I made 20 pips on that trade, the tax man takes out 5-7 pips out of my pocket without even trading, with no anxiety. Like I'm doing all the hard work, and someone is just taking pips out of my pocket every single day. Jay Robertson, I said 1983 on gold. Well, oh, sorry, I didn't analyze gold yep, but there goes gold, guys. So 1983. This was a bullish ignited impulse breakout. Okay, so this is the thing. This is the question. If I could get $1 for every time everybody asked me this question, I would be a billionaire. Okay, everyone asks, where should I get in? Like, should I buy the impulse or should I wait for the retest? Okay, at every single time, like, if we don't know what's going to happen. Like, what happens if you bought all of these impulse candles out here? You would have got trapped. What happens if you sold these impulse candles down here? You would have got trapped. So in this situation, if you didn't buy this candle, we don't know. It could have just came up a little bit and got rejected and came back down. This one actually pumped higher and opened and continued to move up to 1986. Now it's got a big rejection, and now it might come down to give you your retest. But also what you can do is, guys, you don't need to always trade like 5-minute candles. Like what I do in this situation here is, I'm also a 5-minute trader. Okay, so right here, the breakout of this candle, what we can do is when we see it pushing up, we can go to the 1-minute candles. And what you can do is you can enter on the 1-minute candles. You see right here where the 1-minute candle at 540 broke and closed above. We were watching the 5-minute candle. That's why you missed that kind of move. It looked like an impulse. But if you're a 1-minute trader, 540, we closed above this area. The next candle was red. Okay, we assume it's going to come back down to here. It just was a small pullback. The next candle is green. It's kind of like a 3-bar play. There's your green, there's your pole, your flag, red, and then there's your continuation. You could have bought right here at 542 and then placed your stop loss below the demand structure, and then you could have rode it all the way up to there. So like if you bought on the 1-minute candle right there, you got confirmation now. You just ran about 20 to 25 pips. And if you don't take out money, see how quickly the 1-minute candles can come. Watch, they'll probably come all the way back down, and they could possibly retest the same area. So this is another thing, guys. If you trade 5 minutes, like I trade 5 minutes, but I also love scalping 1 minutes. I follow my 5-minute zones like here, but when you see this big candle, I understand. If you're a 5-minute trader, you missed out on it, because now you're waiting for the retest. But the market will still maybe potentially come back down to you to get back in. But if you want to enter on the ones, you could. Even US 30. We can take a look at US 30, DAX, where we could have entered on the 1 minutes. Like, you can break it down. We're still using the same zones right here on US 30. See where it came up there? That 1-minute candle right here closed above. What time was it? 5:38. There's your retest, 5:39 and 5:40. You could have bought any one of these 1-minute candles, place your stop loss 50% of this red green candle or below here, and then there's the 1-minute candles coming up to that 5-minute supply. They came up, rejected, came up, rejected. You scale out. They continued to move up, but now we're barcoding green, red, pushing back down, coming back up. We could have entered on DAX on a 1-minute candle right there, 536. See where it closed above that previous red line? There was the close, there's the retest. We could have bought right there another time. And you can trade 1-minute candles with this type of top-down analysis. It moves much better in New York, trading 1-minute candles, because they're explosive 1-minute candles. When I trade US 30 in 1-minute candles in New York, one 1-minute candle can be 15, 20 to 25 pips. If you get a string of them, 2, 3 in a row, you can make 50 to 75 pips in a couple minutes. But you got to be patient, you got to be disciplined, you got to look for those good quality setups, guys. Okay, so see how I mark this area right here? Those are targets, guys. You know, we can't play around with targets. We gotta, when we enter a trade, you gotta have the same type of exit in a trade. Otherwise, you're just guessing in the market. I hope it goes here. I don't trade with that. I don't hope any trade goes anywhere. I hope it goes to a target and I execute. I trade like a robot. I don't play games, And if it continues to run, I don't care. To tell you the truth, I don't care, because all I do is I look to lock in profit. I look to lock in pips. 20 pips here, maybe 20 pips on another trade, maybe catch a trade in New York. Before you know it, you're at 50, 100 pips a day, and you can do this day in and day out. And we're here, SST, we're here to help you guys. So I hope you appreciate what we do here on YouTube. All we ask is for a like and a subscribe, and we do this daily, but we've moved our New York live more for our Zoom members, because they ask more questions, not how much like we make and things like that, or type of cars we drive, and it's more good questions about trading, and that's what we enjoy. So sometimes we come on YouTube and people are asking me for my social insurance number, and we're just wasting time. So if you guys got good questions on YouTube, we entertain them. But silly questions, go to a different channel and ask them those questions. We're all here to make pancakes. Yes, David, right as soon as I said it, man. It's all about the pancakes. No one's asked me what my favorite pancakes are. Nobody. I love blueberry pancakes. Dan, I think you missed it, but early. But do you have any tips for fear of losing? I missed a lot of trades because I don't want to lose. You got to overcome that fear. Dan, I'm going to ask you if you've done your top-down analysis. You started with the daily. You got your 4-hour, hourly support resistance lines. You're patient. You're disciplined. You're trading with proper risk management. Then there's no fear. You got to overcome that fear. You gotta be confident with your charting, Dan. You gotta be confident with your risk management. If you're not risking a lot, then go for it. Take that trade when you feel like right here. I was confident to take that trade. Maybe I got caught. I did go in a little early on that impulse. I could have waited maybe after this pullback and got in, but I thought it was going to break out there. But still, I was confident enough to hold the trade because I placed my stop loss down here. I wasn't risking too much. I was also watching the liquidity over here. And then when I started to see that right down here where it came down 50% of this candle and got that big rejection, I felt confident that this trade was going to run. So it just takes time, Dan. Believe me, a lot of us, we didn't learn this in a month. We didn't learn this in a year. We didn't learn this in 3 years. Some of us took 5, 10, 15, 20 years to learn what we know. And I'm still learning every single day in the markets. So it takes time, but don't be scared, okay? If you're not over leveraging your account and you're risking 1% of your entire account per day, you're within your risk. You need to take 100 trades in a row to lose your money. I don't think anybody on this call is going to lose 100 trades in a row, unless you absolutely have no idea what you're doing in the markets. But trade with proper risk management, and it's to get your confidence too. Even if you're making only, you're trading with 10 cents a pip, and you make 50 pips a day, you're making $5. I know it's not a lot, but you're improving your confidence in order to take the bigger setups. But we got a big rejection, guys. Okay, so you see how US 30 came up to previous area. Like this was a green. Look at here. This opportunity here came down, bounced, and came up 2 big green bars right up here. And that's where we got rejected. We had a double bottom, and we came up again right up to this red area. We did break for a new higher high. That's for later on. But we got rejected. So now we're retracing right back down to where we entered the market. So like here, from here to here, 15 pips. If you don't take out anything in that red box, then this is what happens. Same with me. I got out on DAX up there at 20 pips. If I didn't secure anything, it's coming right back down to where I entered the market. So that's why, guys, I do not leave pips on the table, because I used to trade like this, where I used to go up 20 pips and then I say, let me try for 40, let me try for 50, and then always it would come back to my break even. Then I started looking at my journal, and then I was saying to myself, why am I trading just for break evens? I'm trading to get some pips in the bank. So if it goes up 15, 20 pips, I make a decision. Especially if it's coming up to identified areas in the market, you got to make a decision, okay? And then look at every time we came up, we started getting rejected. Came up again to that yellow line, rejected. Look at now the offers, how they're populating big, okay? So maybe this was a little liquidity grab to the high, a lot of the offers got absorbed. We're still below the VWAP, so we probably still have a lot of selling pressure. That look at this head and shoulder pattern that after the call that's developing. See here, this whole zone, left shoulder, that was the head that we bought. We kind of bought that for that move coming up, and now it's coming back down. So if we trade inside here, this yellow to yellow, they accumulate in here. If we lose all these bids, then the market is going to drop down here, and this is where the market is going to sell off, below here. See this demand area? We haven't really broke and closed this area this entire call. So see now going into New York, this could be the big sell-off coming down to that bigger demand area. For DAX, it's below this. Okay, you could look to short below. I would look more to short below the yellow daily line if I'm looking to short. I would stay below critical levels. Just in case if you short here, it comes down to that yellow line and goes right back up. This is more of a confirmed area on a higher time frame. Pure, you caught 50 pips on gold. Good job. Yeah, gold was a impulse breakout on the fives, but if like the way how I broke it down on the 1 minutes, you can enter on 1 minutes, guys. Okay, you don't you can follow the 5 minutes, but you can execute on the 1 minutes. Okay, so for anything that you're trading, anything, even down here, if you want to watch, when we were looking for a sell for volume to close below there, you can see the 1 minute candles coming down, getting rejected, coming right back up, and you could see how they're developing here, and there's the 1 minute structure, there's the 1 minute resistance. Just like any other time frame, just like anything else, 1 minute candles make resistance too. And then we came into the demand area, bounced. There's the candle that closed above. We look for a 1 minute candle to come back and retest this level. It doesn't. It's an ignited bar. You can buy here, place your stop loss below there, and ride these 1 minute candles all the way back up. Okay, guys. So that was a fun session, guys. I did more analysis with you guys to start with the top down, but you guys understand that top down can lead you to have a successful day. If you don't do a proper top down, then you're kind of setting yourself up to not know exactly where you're trading. Because a lot of traders say, Ron, how do you know where to take profit, or how do you know where to buy? I just follow the top down analysis. So normally I don't do 5 charts by myself when I'm trading. Normally I just do 1 or 2 securities, and that's what I watch. But for you guys, I try and do everything. We try and do gold, oil, a forex pair. We stick with 2 indices. So there's everything for everybody. But make sure you guys are doing a good top-down analysis, a proper top-down, and that will help you throughout the day. Okay, so that's why I spent a little bit more time with you guys on the top down. Tomorrow for London, we're gonna get into it. We'll go 3, and hopefully we'll have all 5 charts done by 4 a.m. and then we'll get trading. Okay, so thank you guys, like for everybody that joined, subscribed, hit that notifications bell. I can't stress that enough, because Dave and I might do some pop-up calls here and there on YouTube. Maybe it's just some like educational videos too, so that you guys do get notifications as those as well. If you want to learn this type of style of trading, we excuse me, we do teach it here. Let me just sip on some milk over here. We have, guys, if you just want signals, we have signals alone, but we recommend that you join the group, be part of the group with us. You get all the lives, you get all the education, you get to be part of the Discord. So you have a lot of fun with us. It's a great community. We all help each other out. We're all here for each other. So guys, if you're looking for also a broker, check out HankoTrade or AAAFx. AAAFx is the regulated broker, and Hanko is the unregulated. Hanko is if you want to deposit in crypto and get withdrawals in crypto. It's crypto friendly. AAAFx is good too. They have like Islamic accounts too, if that's what you guys are concerned about with swaps and interest rates. They have accounts suitable to Muslims in there. And yeah, guys, so great session. I had a lot of fun. I'm going to go to sleep now. Big Dave is going to take over. Unfortunately, it won't be on YouTube. It's in the Zoom, guys. So if you want to join us, have a lot of fun in there. Guys in the Zoom, enjoy it with Dave. Have fun in New York. Remember the red folders that we got going on coming up. So Jolt's job openings. And then tomorrow, guys, FOMC. Okay, we'll talk about it tomorrow. But these folders, the market could be waiting for this tomorrow. This is where Powell talks about interest rates. So look at, they're already forecasting an increase. Okay, previous was 5%. Look at what they're forecasting, 5.25. So they're already predicting a 0.25% increase. I don't think he's going to increase a 0.25%. My personal opinion. I think he's going to leave it the same. So, but if he does increase or keep it the same, or it's going to be big. Look at we're getting a break now. We lost that support level. Okay, so there's the drop. Okay, you can see how we're dropping, we broke, and there's the big push down, guys. Okay, so the market can now, going forward, 6 a.m., we can close below, and if we use this as resistance, we're going to see drop in the market. See it dropping now? So see that head and shoulder pattern that I was telling you guys about? This was the left shoulder. We bought the head up there, and now it's coming down. Trap those buyers, and there's the drop at 6 a.m. Big hourly candle come in the market, and look at the big drop, guys. That's a big drop. So that's an ignited move pushing down for 15 pips. If you want to catch it on the ones, if you right here, 6 o'clock, we close. There's the pullback. There's the close below, 602, 603 ignited bar. You could have sold this 1 minute candle, place your stop loss above there, and you could have collected 10, 15 pips coming down. So there's always a method to this madness of trading. You don't have to always sit on 5 minutes. You can execute and do sniper shots on the 1 minutes. So thank you guys. I appreciate everybody. I gotta sleep, otherwise I'm gonna talk all day here, and I gotta get some sleep because I do Monday, Wednesday, Fridays. I do like full days with you guys. I do 3 till 6:30, and then I come back for New York with you guys. So this is the time where I gotta sleep till at least 10 o'clock in the morning. So thank you guys. Appreciate all of you guys. God bless everybody on YouTube. Thank you guys for joining. Almost 300 of us. I appreciate you guys. Thank you guys for the likes, the support. Thank you guys. I hope I help you guys analyze these markets a little bit better. Hopefully help you guys maybe with entries, exits, and things like that, and learning how to do top-down analysis. Good questions, other than the asking for social insurance numbers and driver's license and how much money I make and things like that. And guys on Zoom, have fun today. Enjoy the day. It's Tuesday, and I will see you guys later. God bless everyone. Take care. Have a good day, everyone.
Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips, and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders.